open this hearing. Are we ready? Yeah. I declare open this hearing of the Parliamentary Joint Committee on Corporations and Financial Services into the Oversight of ASIC, the Takeovers Panel and the Corporations legislation. I begin today by acknowledging the traditional custodians of the land on which we meet and pay my respects to their elders past and present. And I extend that respect to Aboriginal and Torres Strait Islander peoples here today. The committee will be conducting today's hearing via teleconference and in person. These are public proceedings being streamed live via the Parliament's website, and a Hansard transcript is being made. I remind all witnesses that in giving evidence to the committee, they're protected by parliamentary privilege. It's unlawful for anyone to threaten or disadvantage a witness on account of evidence given to a committee, and such action may be treated by the Senate as a contempt. It is also a contempt to give false or misleading evidence. Witnesses also have a right to request to be heard in camera. If a witness objects to answering a question, they should state the ground upon which the objection is made, and the committee will determine whether it will insist on an answer having regard to the ground which is claimed. If the committee determines to insist on an answer, a witness may request the answer be given in camera. I remind any committee members and witnesses who are appearing via video conference and who are not speaking to mute their microphones. I now welcome representatives from the Australian Securities and Investment Commission, and I understand that information on parliamentary privilege and the protection of witnesses giving evidence to Senate committees has been provided to you. For the Hansard record, will you please state your full name and the capacity in which you appear? Mr Longo, we might just start with Mr Yanko and go straight along the line.
Thank you. Greg Yanko, ASIC CEO.
Alan Kirkland, Commissioner.
Simone Constant, Commissioner.
Joe Longo, Chair.
Sarah Court, Deputy Chair.
Kate O'Rourke, Commissioner.
Thank you very much.
Chair, if you don't mind, we have actually a couple of other people sitting behind us if you want them to introduce themselves now, or
if they're required, we might get them to do that as they come to the microphone. Yeah,
no
thank you very much. I now invite you to make a short opening statement, Mr Longo, and at the conclusion of remarks, we certainly will have questions. Thank you.
Fully expected. Thank you. I'm pleased to appear before the committee once more today. I'm joined today by, I won't repeat the introductions, we appreciate the committee's interest in the topics you've provided us ahead of the hearing, and I'll make a few short remarks in relation to some of these. And as you know, Chair, we've provided a fairly comprehensive submission as well, so hopefully that'll help the discussion we'll have later today. You asked us for an update on our enforcement work. ASIC has had some important regulatory firsts in recent months, including the first win in a greenwashing civil penalty action, the first infringement notice issued to a market operator, and our first civil action against the ASX. We are taking strong action against market manipulation. We laid charges, criminal charges, in an alleged pump and dump conspiracy that used the messaging platform Telegram, with the defendants facing a maximum penalty of 15 years imprisonment and a fine of over $1 million. During our investigation, ASIC took the unprecedented step of posting messages in the Telegram chat room to warn traders they may be breaking the law by seeking to organise stock price manipulation. And we are pursuing large corporations as well. In September, ASIC's action resulted in ANZ being ordered to pay a $15 million penalty for misleading customers about funds being available for withdrawal without incurring fees. Last month, the full federal court dismissed ANZ's appeal against the judgment and upheld the original finding that ANZ breached continuous disclosure laws when undertaking a $2.5 billion institutional share placement in 2015. Following an ASIC investigation, the Markets Disciplinary Panel issued Macquarie Bank a record $4.995 million fine for its failure to prevent suspicious orders being placed on the electricity futures market. Last week, we commenced court proceedings alleging QBE Insurance Limited misled its customers about the value of discounts offered on certain general insurance products. And on Wednesday, we commenced proceedings against Oak Capital for conduct we argue was unconscionable and designed to avoid consumer protections under the National Credit Code. ASIC has more enforcement action due over the coming months, targeting behaviour that has been detrimental to customers and the market. There's been a lot of interest in ANZ's role in the AOFM bonds matter. Since February 2023, ASIC's been investigating suspected contraventions by ANZ in its role as joint lead manager and risk manager on an issuance of $14 billion 10-year Australian government treasury bonds conducted on 19 April 2023 by the Australian Office of Financial Management. Our investigation is continuing. We recognise the investigation continues to attract significant public and media interest. To preserve the integrity of the investigation, it is not appropriate to provide ongoing commentary on the investigation. Our investigation concerns suspected market manipulation and contraventions of a number of provisions of the ASIC Act and the Corporations Act. In August 2024, we expanded our investigation to include suspected contraventions relating to errors in ANZ's reporting of secondary bond market turnover data to the AOFM. We are giving the investigation the highest priority, given the seriousness of the alleged misconduct and the potential for the alleged conduct to impact the interest payments of the Commonwealth on the bonds issued, and therefore affecting Australian taxpayers. As we have said previously, we expect to form an internal view in the first quarter of 2025 about the suspected contraventions and whether any enforcement action should be taken. Turning to AI, in addition to the information provided in our submission, this week we released a report on our review of AI use by retail financial services and credit providers, where we found the maturity of governance and risk management practices is not keeping up with the nature and scale of AI use. It is clear that work needs to be done, and quickly, to ensure governance is adequate for the potential surge in consumer-facing AI use. ASX CHESS replacement. We continue to focus on our ASX supervision. We have reflected on our supervisory approach and have carefully considered the committee's recommendations in its April 2024 report on its inquiry into CHESS replacement. We are enhancing our capability and expertise on technology delivery, change programs, and our overall supervisory expertise. In our submission to the committee, we noted ASX has changed the status of the CHESS replacement project from green to amber. ASX reported that this is due to delays in the product acceptance testing and the data platform build for CHESS replacement. It is critical that risks are actively identified by ASX, managed and tracked, and appropriately escalated. It is important that ASX's risk culture requires and supports the transparent identification, reporting and escalation of risks. The replacement of CHESS, however, is ultimately the responsibility of ASX. ASIC has taken short-term steps to enhance our monitoring of the CHESS replacement project, and ASIC and the RBA are closely monitoring ASX's governance arrangements for the CHESS replacement program to ensure ASX manages the risks associated with the implementation. As I mentioned, in August we commenced proceedings in the Federal Court against ASX for allegedly making misleading statements related to the CHESS replacement project. ASX's statements go to the heart of trust in the integrity of our markets. When these fall short, the consequences in the market can be wide-ranging. ASIC will not hesitate to take further regulatory action, including the use of our new powers under both the FMI reforms legislation and competition in clearing and settlement legislation to hold ASX accountable for the CHESS replacement project and meeting stakeholder and community expectations. Turning to audit. In addition to the information in our submission, this week we published our annual integrated report on financial reporting and audit surveillance. Our review identified improvements needed across audit approaches and financial reporting, resulting in financial adjustments of $1.88 billion and outlined ASIC's audit-related enforcement outcomes. We recognise this committee's work and recommendations concerning the auditing profession's approach to conflicts of interest. We are continuing to evolve our approach to this work. This week, ASIC wrote to almost 3,000 registered company auditors and the CEOs of the 6 largest auditing firms, advising that we are commencing a review into auditors' adherence with independence and conflict of interest obligations under the Corporations Act. You can expect we will use our compulsory information gathering powers where we identify an issue. It may also extend to seeking information about the systems and controls relied upon in audit engagements to ensure compliance with independence and conflict of interest requirements. Yet another major piece of work that ASIC is working on is the question of public and private markets. As a modern, confident and ambitious regulator, we work proactively to identify and respond to developments that could affect the integrity of this system or impact consumers and investors. Our efforts have ensured Australia has remained one of the cleanest listed equity markets in the world for the past decade, where Australian companies can do business with certainty and Australians can be confident to invest. As this committee would know, public listings have been on the decline. At the same time, private markets globally have experienced significant growth. There are estimates that global private capital assets under management are over US $14 trillion, triple a decade ago. This is an estimate, as there are gaps in the data to size and monitor this sector. Australian private capital funds have also experienced significant growth and are becoming an increasingly important source of funding for our economy. Major superannuation funds have over 20% of their assets invested privately. This year, we've been leading a conversation with market participants about the role of public and private markets. The Commission has been involved in a range of panels and roundtables recently, examining the changing dynamic between public and private markets, including the growth of superannuation, to ensure they continue to deliver good outcomes for consumers and support the efficiency of our capital markets. I and other commissioners will be happy to discuss these issues in further detail. In coming weeks, we will release a discussion paper, along with ASIC Commission research, which explores the current state of Australia's financial markets. I want to conclude by talking about ASIC's transformation journey. Last week, at a separate hearing, I reflected on ASIC's journey of growth and transformation across the past 3 years, including the most significant organisational redesign of the agency in 15 years. ASIC's transformation as an agency has continued to deliver results, including enhanced collaboration across teams, with quicker times for matters to progress to enforcement and compliance action, improved data analytics and surveillance capabilities, underpinned by our long-term approach to becoming a leading digitally enabled and data-informed regulator, and strengthened engagement with external stakeholders to listen to their views and set clear expectations of those we regulate. You will have seen our recent developments about key appointments to our senior executive leadership team. Following an international search, Peter Soros will be joining ASIC in November as Executive Director, Regulation and Supervision. And as you would have noticed, will notice, if Chris Savundra is called upon to speak, has been appointed to the role of Executive Director Enforcement. Chris, you'll recall, was formerly our General Counsel, effective from Monday this week. We will continue to focus on ASIC's transformation, including a strong focus on backing our dedicated people and investing in data, systems and technology. I'm very optimistic about ASIC's future. Our renewed executive leadership team and focus on building a strong culture will set the agency up to evolve and respond to new challenges in our operating environment and to the threats and harms that emerge. So we look forward to answering the committee's questions, Chair.
Thank you. Thank you very much indeed, Mr Longo. The committee has determined in the last few hearings to indicate that there are key areas that we want to discuss. So thank you for referring to them in your opening statement. And can I also acknowledge that there is a submission formally to the committee with further detail, which we will interrogate across the course of the day. I also want to acknowledge quite a number of questions on notice that have been put to you, and I do want to ask questions about those over the course of the day as well. But for the first line of questioning, I will go directly to Senator Scarr. I understand also Senator Pratt is with us. Thank you.
Thank you, Chair. If I could first go to the annual report, and sorry I can't be there with you today, I've got a major community event this afternoon. If I can go to the annual report, table 3.
Senator, could I ask you for a page number?
Page
Joe
number
Longo
3, I
speaking.
believe.
Page 30.
30.
There.
Thank you.
So what I wanted to do in the first instance is work through these outcomes or key activity metrics and obtain an appreciation, some additional commentary in relation to the outcome. So the first one is in relation to surveillance, and it refers to surveillance as completed, and there's a difference between 2022-23, 2023-24, quite a marked difference. However, I note that under the footnote, there seems to have been a different approach, which accounts for at least maybe 50% of that difference. So if you could please speak to the different approach, why the different approach was implemented, and how it impacts on the interpretation of these key activity metrics.
Thank you, Senator. I'll ask Deputy Chair Court to start the discussion on that question.
Good morning, Senator Scarr, Sarah Court speaking. So I have the Table 3 in front of me that your question relates to. So you're quite right in terms of observing the decrease in the surveillances, or what we have formally described as surveillances, and the decrease between 2022-23 and the last financial year. The reason at a high level, and I think you, Senator, referred to the footnote. So as we've given evidence to the committee before, we did have a significant organisational change, you'll recall, that took effect from the 1st of July 2023. And as part of that change, one of the things that we moved was what had previously been called reactive surveillances, moved from our now regulation and supervision group into the enforcement and compliance group. And the reason for that, Senator Scarr, is that that work is in effect what we would call preliminary investigation. So it relates to when we've identified misconduct. The matter comes now into one of the teams within the enforcement and compliance group, and then that team engages in preliminary investigation methods. So issuing statutory notices, talking to witnesses, doing reviews of various materials and complaints. And so that work now is referred to, and you'll see further down in the table the reference to preliminary investigations. So the like-for-like figure, as I think we make clear in the footnote, is the 690 surveillances together with the 284 preliminary investigations is the like-for-like comparison for the former figure of around 1,300 for the former financial year. In terms of the reason for the decline, which I think was the second part of your question, I think it's fair to say that the organisation, as I think you would anticipate, following such a significant restructure, took some time to bed down the new processes, the new structures. There are a number of staffing changes and team changes. And so there are a few areas, it's not across the board, but there are a few areas where I think the metrics, and no doubt we'll come to some others of them, declined in the last financial year. But we are confident that with the new structures and with the improved workflows and certainly the ability for us as a result of this restructure to move matters more quickly through the organisation, which was one of our most significant motivations for the change, that we will be able to address those activity metrics.
Okay, that assists. The next line item is instances of potentially misleading or deceptive promotional material withdrawn or amended, and the activity metric in that regard indicates a 50%, over 50% decrease. Now, that could be a good thing in the sense that if there's regulatory activity in year one, then hopefully you see less of the same misleading or deceptive conduct in year two. So that might indicate the regulation's working. So again, interested in your insights in relation to that figure.
Yes, I'm not sure I necessarily share your optimism, Senator Scarr, that the reduction in numbers suggests a reduction in that form of conduct. I think in relation to that figure, that is slightly outside my understanding, and if anyone at the table can jump in and assist me with this, is that that similarly relates to work that is done by what is now our regulation and supervision team, and relates to engagement, so not a formal enforcement or compliance outcome, but relates to a circumstance where we have, in our surveillance work, identified publications, PDS documents and the like that have contained material that our investigators or officers consider to be potentially misleading, and in effect the work of that team, of those teams, has been to procure an amendment or a change to the document. So these would be examples, Senator, that it's not clear and unequivocal misconduct that necessarily needs to be elevated to a formal enforcement or compliance response, but rather, of course, it remains a significant regulatory outcome of making sure that any of these forms of documents, when they're put to the public, obviously don't contain material that might be considered to be misleading or deceptive. I haven't got an answer for the moment as to why that number's come down. Suffice to speculate it may be for a similar reason to that which I mentioned earlier in relation to the changes to the teams. But I think Commissioner Kirkland is looking at me eagerly with some, maybe he's going to correct my explanation, Senator, or hopefully add to it.
Most
Thank
definitely
you.
to add to it, Alan Kirkland.
Yeah, I'll just name you because it will make it a lot easier for everybody who's listening. Thank you, Mr.
Thank you.
Kirkland.
Just another comment of context. This is a metric that to some extent is driven by the priorities that we identify from year to year, and the nature of the surveillance activities that we undertake. So, for example, if we're undertaking surveillance activity that relates to the way in which products are sold, we're much more likely to be looking at the claims that are made about those products and potentially identifying examples of misleading or deceptive claims. Whereas if we're looking at something like hardship practices, which is something we've talked to this committee about before, because the obligations we're looking at there are much more process related, we're less likely to identify instances of misleading or deceptive claims. So it's a metric that might move around from time to year depending on the types of misconduct that we're focusing on and the themes that we're looking at in our surveillance work.
Okay, thank you. The next one, interim stop orders and final stop orders on disclosure documents. There's a material difference between the figures in 2022-23 to 2023-24. Now, that might be indicative of decreased activity. There might be some other reason, but again, interested in your insight with respect to the interim stop orders and final stop orders. And then there's the stop orders. The next row refers to stop orders under design and distribution obligations.
I'll have a go again, Senator Scarcera-Court here speaking again, but then we'll hand over to others at the table. I think if you look at both of those suites of figures in relation both to interim and final stop orders on disclosure and the stop orders under the design and distribution obligations, perhaps if I turn to the latter first, which is the design and distribution stop orders. You may recall, Senator, that the design and distribution obligations were a new law that took effect from late 2021, and a very significant new law, and imposed a range of new obligations on those who issue and distribute financial products. So we had a bit of an education campaign and a transition period immediately after those laws came into effect, but very much put the industry on notice that we would be doing surveillance work in relation to the compliance with what we call the DDOs, or the design and distribution obligations. So the high number of stop orders imposed in the 2022-23 year reflect a significant piece of activity that we undertook in a similar way that Commissioner Kirkland has identified that we had a specific campaign. We went in and did a lot of surveillance work. We said to the industry, you're on notice, these are important obligations, and if you've got target market determinations out in the market that we think fail to comply with those obligations, that we are going to issue stop orders. So it was a very deliberate campaign in 22-23. I think now really we're moving our DDO work into what I might call business as usual. It's another tool. We certainly use it, but a lot of the if I could use the phrase, sort of, the low-hanging fruit, the really significant matters that we had concerns about, we dealt with in the 2022-23 financial year. So I don't think it reflects any change of activity or interest in relation to those. It just reflects the campaign that we underwent in 2022-23. In relation to the disclosure documents, again, I might hand over. Is anyone able to give any more information on disclosure documents?
Yep, we have somebody approaching the table. Senator Scarr.
Senator Scarr, we won't at the moment.
Senator Scarr, it's Simone Constant. I might make an opening remark and hand to Calissa.
Hand over to Calissa.
Yeah. Just
Sure.
with respect to disclosure documents, the thing I'd draw your attention to is in part the reduced activity, which was part of your opening comment in terms of the market activity. And Calissa Aldridge, I'll ask to expand.
Miss Aldridge, yes, do you want to state your name and the capacity in which you appear?
Calissa Aldridge, the Executive Director of Markets. So that's exactly the point that I was going to make, that we've had a significant reduction in the activity in equity markets, which naturally has just meant we've had a equivalent reduction in the number of actions in relation to that disclosure.
Thank you. Senator Scarr?
Okay. Yep. Thank you. And then the next row, is there anything additional to add in relation to the stop orders under the design and distribution obligations? There's nothing additional to add in relation to that row because the difference is even more dramatic.
Miss O'Rourke?
Senator Scarr, it's Kate O'Rourke. Just to follow up on the point that Deputy Chair Court
Hold on for a second. Either we need to get the volume
All right,
of
sorry,
your
do you
voice or
want
the
me
volume of
to...
the microphone up to make sure that Senator Scarr can hear.
Is that better?
Much better.
Thank you very much.
Senator O'Rourke.
Thank you very much. So just building on that observation, both from our Deputy Chair but also Commissioner Kirkland, around the evolution of the work that we do in relation to particular areas, just to bring to your attention, Senator, the report that we published in September. It's report number 795 on the design and distribution obligations, which shows that the evolution of our focus in relation to design and distribution obligations over the last year has focused on the distribution practices rather than the target market determinations part particularly. So the distribution responsibilities rest on issuers, that once they've identified their target market determination, that they take reasonable steps to ensure that their products reach that target market. And those might be done directly. They might have direct distribution, or they may have indirect and they get third-party distributors of their products. So we looked across a range of distributions to identify things that we could both in terms of concerns but also areas of better practice or that people could identify. So that report shows that work particularly, and I think it just is building on the point made earlier that our work may evolve in terms of what sort of surveillances we're doing or areas of focus.
Thank you. Senator Scarr.
Okay. So what, just without having had the benefit of recently reading Report 795, what's the rationale for shifting the focus from design more to distribution?
So it was. It's an and rather than instead. So I think we remain concerned if we see areas of target market determinations of concern. So it's not exclusively a focus on distribution. Rather, to Deputy Chair Court's point, that with a new regime, there's different elements of it, and understanding how companies or entities are taking these new regulatory responsibilities and executing them, we found it valuable to have focus areas, and so we have had a number of areas of focus, and this is one we had not yet focused on. Like I said, not exclusively, but it was an important area for us because of that risk that if You might have a great product or a great target market, but unless the product gets to the right target market, that distribution link is an important part of the design and distribution obligations, and we had not yet had a particular area of focus on it. So we hope, and of course, if having had a look at the report, there's questions that flow from it, we'd be pleased to assist you with it. But we think it was an important area of focus for ASIC.
Yeah, Senator, just ask
Mr. Longo.
Commissioner Rourke to supplement. Stepping back from the DDO regime, that I think the key concept for me, the way I've always understood it, is it's intended to regulate the life cycle of the product. And so when you go at the beginning, you have the target market determination. So issuers are required to figure out who their target market is, and so they do that, and then they have to track whether they got it right, as Commissioner O'Rourke was saying. And so the whole regime is intended to make sure that from the moment the product is issued, as distributed, that it all works according to plan. So that life cycle part of the concept, we're right in the midst of, I think. So the regime, as Deputy Chair Court noted, started in August 21. We're sort of just 3 years into it, so we're about to see that life cycle where a lot of products play out. So I think the impact of this regime is emerging. You know, we're likely to be revising and reflecting our enforcement efforts as we see how that life cycle plays out. I don't know whether Commissioner O'Rourke wanted to elaborate on that.
No, thank you. And I think that's right. There's both that aspect of the monitoring. So this focused on the distribution being well set up. Like I said, whether it's direct or indirect, how are people choosing third-party distributors? If they've chosen them, have they done enough due diligence? And then are they monitoring the third party's distribution is consistent with the target market determination and the reasonable steps that have been determined? That responsibility rests on the issuer. You can't delegate it to your third-party distributor. You have got to have that confidence in the process. And then to our chair's point, then we do need to continue to see whether once it's been set up, it's what are the outcomes that are being review. So there are triggers for reviewing target market determinations and distribution methods built into the regime as well for that point you're making about the life cycle.
Senator Scarr, I just want to ask a question there. Are they time-related triggers? Like, is there a schedule that has to be followed? Like, what triggers the review?
No, my understanding of the regime is that there aren't set statutory timeframes for it, but I might, through the course, find out if I can find the exact phrase that's used for that trigger to answer your question more specifically.
Thank you. So it sounds like it's a self-determined.
No, I think there might be a degree of guidance. So let me get the phrase for you.
So back to you, Senator Scarr.
Thank you very much. If we can, and obviously you'll understand, I'm using this as an opportunity to go through the outcomes, the reporting of outcomes. So I'll be working through the list. The next one's the scam disruption website takedowns, which is quite an extraordinary figure, over 7,300. But there was nothing in 2022-23. So again, that's an indication of the launch, I think it was back in July 2023, of that initiative, and obviously it was a key initiative and hopefully it's having some sort of material impact.
Ms. Court?
Yes, that's right, Senator Scarr. So that is a new program that ASIC has run. We receive specific funding for this project, and as you'll be aware, the government has currently got an intense interest in scams, and ASIC participates very actively in the National Anti-Scam Centre that's hosted within the ACCC. ASIC's jurisdiction relates to investment scams, particularly for self-evident reasons, and one of the key pieces of work that we have been doing in the attempt to disrupt and fight scams is the running of this, what we call it, a scam takedown service. So we receive reports from members of the public and also through the NASC, so referrals from the National Anti-Scam Centre in relation to sites that are understood to be fraudulent scams, phishing sites and the like. We look at those. If we're concerned by them, we send them to a third-party provider who has the ability to effectively get them taken down, often within a number of hours, and then monitors that they don't sort of pop up again, you know, a few hours later or a couple of days later. So, you know, in our view, that's been a very successful and important piece of practical work that we've been able to do. And while it's not in the in Table 3, Senator, the other very important piece of work on scams that ASIC has done, and we may have discussed this previously, is we've also relaunched our investor alert list, which is a list on our MoneySmart website that we refer or include any investor claims, companies, programs and the like that we have concerns about and that we think are fraudulent or may be involved in less than appropriate conduct. They go on to the investor alert list as well. So it's a combined approach of getting sites taken down and also putting people on notice as to those sites that we're concerned about.
Excellent. Well, congratulations on that figure. It's quite extraordinary. I mean, if anything, it gives an insight into the magnitude of the problem, to be frank.
Yes, indeed.
Senator Scarr, can I just jump in there because we're on the scams? And can I just direct ASIC to the submission, Section C of your submission today, because we've hit the scams thing. I mean, the number is amazingly impressive, as Senator Scarr has indicated, and I'm sure he joins me in just sort of sweating bullets of relief that this is actually happening for Australians who have just paid extraordinary amounts of money to scammers. I wanted to just take you through your evidence to us in your report. And my first question really is this alert and scam related information. You indicated that it goes to a third party. I just wanted to understand the mechanism of that a little. And I asked this question, if I can frame it in this way, in terms of how fundamental this form of policing is and is likely to continue to be over time. The skill deficit we have in AI knowledge, cyber intervention, and the current use of third parties, which we know is a risk to entities, not only because it doesn't create a stable workforce, but it doesn't keep the information moving around in-house. So my questions go to, how do you engage with the third party? How easy is it to access them? What transfer of knowledge is happening inside ASIC? And how are you building, training, creating your own in-house people to do this work that is not going to go away? So it's not, in my view, to be contracted out if it's going to operate at the highest level. What's your plans around this?
Senator, the third party that ASIC contracts with is a company called Netcraft, and Netcraft are a global cybersecurity provider that has specific expertise and capacity effectively in detecting cybercrime, fraudulent websites, and it works, as I understand it, with both private companies and regulators around the world. And the way that it operates is it doesn't have any actual powers, if you like, because it operates globally. The way that it operates is that it has developed deep relationships with the hosts of various domains and registers around the globe, because of course many of the websites and the scams, and again I think we've talked about this before, I use the word scam, but it's in effect global organised crime that is of a very sophisticated scale that targets countries around the world. So we did a pilot, ASIC and the ACCC about 2 years ago did a pilot with using Netcraft. We did a 3-week pilot And my recollection is that in that 3 weeks, we, ASIC, were able to have Netcraft take down more sites than we had been able to achieve in the 3 years previously. So it was just chalk and cheese in terms of what we were able to achieve. We continue to work very closely with Netcraft. After the pilot, we then engaged Netcraft with some specific funding from government. We procured their services for another 12 months, I think it was, and we're actually currently in the market again, making sure that we are getting the best value for money for this work, because there may well be other providers that, again, can give us competitive pricing.
Ms. Ford, just before you go on, that's a very interesting observation. So 3 weeks, more sites brought down than you could in 3 years. This escalation up to 7,300 down. There's clearly a degree of something going on with Netcraft as this third-party provider. I'm interested with your assessment through your procurement review processes,
Yes.
whether your view is that they have an expertise, a knowledge set that is achievable and acquirable by others inside your organisation, or is it the relationships that you refer to in your response that enables them to act so quickly, which is a very, very different part of this ecosystem? I want to understand which bit's the critical bit.
Yes. Senator, I'm speaking a little bit out of my expertise, and I am not personally involved in the relationships or the procurement with Netcraft, but my sense is that this is not an expertise or capacity that ASIC or potentially even any government agency could develop sort of on their own, because the effectiveness of Netcraft, and as I say, I'm sure there may well be others, global providers, their effectiveness and their ability to achieve these very almost instantaneous results are based on their global networks, their interaction. So if there's a site that they are negotiating with a domain host in wherever it may be, Europe, the US, Africa, I don't know, that site is inevitably not just targeting Australian consumers, but will be targeting other countries around the world as well. So Netcraft is bringing together all of the knowledge that it is obtaining through all the work it's doing across the globe, and ASIC is getting the benefit of that. One of the very interesting facts about Netcraft, and I confess, at least for me personally, this was an unanticipated outcome, of that 7,000 takedown sites, a large number of them have not been identified by ASIC. Many of them have, but Netcraft itself is able, because of its expertise and what it's seeing on a hourly, day-by-day basis, it is able to identify sites itself that it has seen in its work that might be targeting Australian consumers, and it refers them to us and says, we've found this one, we think this might be problematic for ASIC, so for Australian consumers. So we look at that and say, yes, absolutely, take that one down. So it really is it's quite a unique arrangement in many ways.
It sounds like an international cyber police force.
Yes, just privately owned, Senator.
Yes.
Privately owned, and no doubt it is getting appropriately recompensed for this work. But I think going to the heart of your question, which I'm very sympathetic to, is this expertise that ASIC or the NASC, I mean, in some senses, were there to be a government agency to take responsibility for a whole of government approach in this way, it would be the National Anti-Scam Centre.
Yes, which you refer to in your documentation.
Indeed, and we work very closely with them. But I'm not, yes, as I say, Senator, I'm probably out of my expertise, but I'm not sure that a government agency would be able to replicate the kind of global reach and global information being obtained and action it in the way that Netcraft or a similar provider can do.
So it's multi-jurisdictional, yes. And that is what enables it to do its work. Yes. Does it have any intersection with Interpol?
I can't answer that, Senator, I'm afraid.
Perhaps you might take that on notice. And if I raise the concern about engaging a private entity, what national security risks are embedded in doing that, if any, and has that been considered? And what is the competition in the market like for this? Are there few or significant numbers of providers? What other jurisdictions use this netcraft? And what would happen in the instance of the collapse of that company providing that service or an infection of their data?
Yeah, we can take those on notice, Senator. It's certainly the case, and I haven't been, as I said earlier, directly involved in the procurement, but we certainly thought very carefully about a number of the risks that you have outlined before this procurement was entered into. We started, as I said, with a pilot to make sure it could actually work. And just to be clear, the data flow going to and from ASIC and Netcraft is fraudulent websites. It's not personal information of any consumers that have been impacted. It's not ASIC information, government information of any kind. It is,
reports of fraudulent activity,
here's
set up the food chain.
Yes, here's a website, flick the URL through to Netcraft. We think this is a scam site, fraudulent investment, phishing site targeting Australian consumers. We're satisfied within ASIC that's the case. Can you have a look at it, take it down? That they do their own analysis as well, so they'll form a similar view. Yes, we agree, we've seen that before, or that's a reincarnation of something we took down last week, and then they act on that. But certainly I can get as much information. I mean, they are a private company. I don't know how much information we have about.
And where are they domiciled?
Yes, I was worried you were going to ask me that, because I assume that they are US domiciled, but I'm guessing. I will find out for you in the course of the day.
Thank you very much. And if you could find out how much they've acted in response to alerts from you and how many alerts they have provided to you in terms of that sort of relationship.
I'll see if I can find that
going there. I note that at paragraph 26 on page 8 of your submission, you support the activities of IOSCO, the APRC Working Group on Scams and Online Harms. You also note in that the capacity to build is helping support in the Asia Pacific region. Could you speak a little more to that? Is it just Australia that you're talking about there, or when you talk about Asia Pacific, is Australia providing any support to our Blue Pacific brothers and sisters with regard to interrupting scams?
It's Joe Longer. That's a working group that's jointly chaired by us and the New Zealanders. And the Asia Pacific Regional Committee of IOSCO pretty much picks up every jurisdiction in Asia. And this is an initiative, as the paper shows, that was established earlier this year. So it won't come as any surprise to the committee that the problem we have with scams is not unique to Australia. Our people in Hong Kong and Singapore, India, every jurisdiction in Asia has the same problem. This is a global problem. And so this is a nice example of a practical manifestation of our membership of IOSCO and the work that IOSCO does. But the short answer to your question is the Asia Pacific Regional Committee is made up of 15 or 16 countries in Asia. We're on that committee. We chair with the New Zealanders this working group. It's an initiative to try to pool our resources and intelligence to not just take if I can put it this way, a domestic approach to going after scams, but to take, as the Deputy Chair Court says, we're dealing with international crime syndicates. So it's early days for this working group. I wouldn't want to overstate the outcomes it'll achieve, but certainly one of them is to build capacity to get behind who's really dealing with these scams. And if we're going to make any progress there, we're going to have to work internationally, not just domestically.
Thank you.
I think I could add to that too, and again I'm speaking without notes, Senator, which is always risky, but my recollection is that just in the last month or so, ASIC and the NASC hosted a number of representatives from our near neighbours for a day or two workshop on this very issue about scam detection, prevention, how to deal with them, because it is such a prolific issue. So I think there's some very real and practical work going on to assist, or at least share the work that we're doing with our neighbours.
Yeah, I'm just thinking in the context of having been recently at the International Parliamentary Union, and how finding things that we all share across the globe as challenges and looking for parliamentary solutions to those challenges is something that's absolutely worth putting on the agenda for sharing. It strikes me as this is one where some infrastructure has already been established, but I don't know if the parliamentary action that necessarily needs to follow is underway. And I guess there's questions about what is the market like in the providers of the scam prevention detection, how mature, how robust, and how safe is that from capture by malign actors, from a cyber threat to them. There's a few of the questions that are just rolling around in my mind, so I'm certainly interested in any more information. Now, talking about legislative action that arises from, good work, prevention exposure, the scams prevention framework exposure draft is out. I understand you made engage with that quite closely with Treasury. From your point of view, what are you hoping to get out of that, and how quickly do you need it to get through the House and the Senate?
Senator, we very much welcome the scams prevention framework and anticipate that ASIC will play a very key role as one of the three, originating regulators under that framework. Clearly, the sooner it passes from our perspective, the better, in the sense that the framework is proposed to set out very clear obligations on the initiating three industries, or sectors I should say, the telecommunications sector, the banking sector, and very importantly the digital platforms sector. So as you say, we have provided feedback and input to Treasury as they've been working through that draft, and very much look forward to doing our work pursuant to the banking code, which will be one of three codes designated in the early days, we hope, of that once that legislation is passed.
Thank you very much. And considering your report numbers 761 and 790 that you referred to, clearly the banks are in a position to see a lot of this. There's been much public reporting of incredible variability in banks' responses to these matters, which I'm sure you've got words to say about with regard to numbers 761. And I'll just hand over to you in a moment. But with regard to 790, looking at 15 practices of 15 authorised deposit-taking institutions, I'd be really interested in getting a little bit of detail on that, because one of the things concerns me from previous inquiries of this committee some years ago, having a look at sort of documents prepared by one of the big four, CPS 220 provision to APRA, to give an idea of what was going on. I had concerns, and it's matter of public record now, about an iterative process about green lighting, orange or red lighting back of house practices. Clearly back of house practices are going to be hugely important in terms of AI detection of what's going on. It's not something that you can get all warm and fuzzy about in an ad, but nonetheless it's essential infrastructure to make sure that every possible interruption of scams or any form of exploitation can be identified. So could you speak to what the current situation is with regard to your 761 and 790 and any intersection you think that would have with the prevention framework and its implementation?
Yeah, thank you, Senator. So we have done a considerable amount of work in relation to having a very close look or a deep dive into the anti-scam detection and responses, firstly of the four major banks, and as you say, that was report 761. That report was some 18 months or so ago now, in April 2023. And look, the whole area of scams detection, prevention and the like, we do recognise it's a moving feast, and that there's been a lot of work done since that time. But that report found effectively that while all the 4 major banks recognised the significant harm that was being caused to their customers by scams, at a high level, we concluded that their approach to scams strategy, governance, and responses was less mature than expected. And following that report, we called for all financial institutions to have a look at this report and to improve their handling of scams. Rolling forward to the report that you've identified, Report 790.
Before we jump onto that, to be clear, 761, banks, you're not doing a good enough job. Read the report.
Yes.
That's a direction. What next?
Yes.
After that, do they feed back to you? Do you observe? Like, what's the response to a report that you expect?
So our regulation and supervision teams then continue to, particularly with the big 4 banks, clearly have very regular interaction with them, continue to inquire, and then we then followed up that Report 761 with our work on Report 790, which was released in August of this year. And that report had 2 purposes, and the work leading up to that report had 2 purposes. The first was to have a look at what the big 4 banks had done in response to our report a year earlier. And so there is a section in that report that outlines and those responses and our views about that. And I think at a high level, it is fair to say that all 4 of the major banks have, perhaps to varying degrees, but have certainly focused in much more intently on the range of scams-related activities in that passing time. But the other important thing that report did was to look at 15 other non-major banks and other financial institutions, because one of the things that sometimes is put is, well, look, it's all well and good for the major banks because they've got the resources and scale and capacity to invest in all of these systems, which of course are expensive, advanced. There's a whole lot of other things banks are trying to do at the same time. So it's all well and good to hold them to account, but are the sort of the mid-tier banks or other deposit-taking institutions, are they able to really adopt the same level of protections and detection? And so that report looked closely at that. And I think one of the interesting findings from that was that really size did not matter as much as we thought it would, and that many of these mid-tier banks were operating just as effective systems as the major 4 were. Some weren't. Some were falling well short. And we found a range of findings that I can take you to, Senator, if you would like me to. But I think the important effect of all of it was, firstly, we followed up with where the 4 majors had got to, and then we extended that surveillance work. We put out a detailed report about our findings, and we are continuing to talk about scams and how important it is for the banks to have a suite of responses. So, it ranges right from the putting customers on notice, what frictions are there in the system, how do you prevent them, how do you detect them in the unfortunate situation that a bank customer does lose money, how do you respond, are you properly resourced do you have people on the phones that are able to help these people through what is often, a life-changing and particularly distressing circumstance. We certainly hear, terrible situations of people transferring very significant sums of money, and then how are we able to hopefully halt the payment of that money? So there's the interaction between the customer's bank and the receiving bank, so working out how to make that more efficient, make sure that the notification gets from one bank to the receiving bank in time to prevent those funds then being transferred out. So there's a lot of work in this, Senator, but we are continuing to focus on it very strongly in our part of the scams ecosystem.
So in terms of CEOs and boards of these deposit-taking institutions and the banks, how seriously are they taking it, and what kind of level of investment? Because it's okay to be talking about it, but there's international best practice. There's debate live about, liability for the failure of the product design from banks to prevent scamming. That seems to be in a sort of discursive phase rather than a deliberative phase. So how practically are the banks responding? What level of investment are we seeing? What's the pressure to do this response to scams as opposed to the pressure to deliver, increasing responses to the shareholders? Because that absolutely is a very important part of being in business, making a profit, sharing that and the wealth creation that comes from it. But it can't be at the expense of people who are vulnerable, made vulnerable because of a failure to create products and system safety that minimises a well-known, documented risk.
Yeah, Senator, I mean, in terms of what each individual bank is doing, in terms of what each individual bank is doing, I mean, those questions might be best directed to the banks. But what I can say at a high level is certainly I don't think any bank could be unaware of ASIC's deep interest in the issue of scams, and our two reports make very clear what we think the minimum or base level standards are. One of the really...
Are you confident they're in place in every deposit lending institution?
We haven't surveyed every deposit-taking institution on this point, Senator. What we have done is done a very deep dive into the Big 4 plus 15, which gives us, I would say, a fairly representative sample. And what we found at the time we did those surveys were that the banks and the other ADIs had variability between them as to how they deal with the suite of scam-related issues that I have talked about. So we have put them on notice as to that.
You've put on notice a number of the ones that you personally, you as ASIC interacted with.
We have done a range of engagements with the bank. So,
but that's that subset that you've just talked about.
No, I mean with the industry more broadly. Okay. So we have been very public. I can't tell you off the top of my head how many of the banks that we've written to, but obviously we engage with industry associations. We put out media releases, we do interviews, and we engage with this sector day in and day out. We have done extensive publicity around these two reports and our concerns about what we found. We engage with consumer groups on these issues on a very regular basis.
I guess my question is, what is the policing dimension of this? Because, I'm a young person, I've just left school, I'm setting up an account. I walk down the road, I see a sign, it's a bank or it's a customer-owned banking entity, and I go, great, I'm in there. Australia's a safe place to do this. You're telling me, and I think people know, there's a degree of variability. Originally thought it was large was better, small was worse. You've disrupted that narrative in your research. You found out, no, that the variability exists across the entire sector.
Yes.
But if I'm an Australian walking in, who's policing my bank or my ADI to make sure that they are not putting all their money into things that, they want to show, rather than the back of house stuff that's required to prevent scams? Who's policing that? Whose job is that? And what's the intersection between ASIC and APRA there?
Well, ASIC and APRA both have a range of roles in relation to the back end, if you like, of financial institutions. But if I can answer your question in this way, the importance of the scam protection framework that we talked about a moment ago, is that that framework proposes to impose very real and granular obligations on financial institutions, together with platforms and telecommunication companies. It will set out with precision, if you want to be a bank in Australia, here's what you have to do in relation to scams. Here's the systems you have to have in. Here's the consumer education you need to do at the front end. Here's the systems you need to be able to do in the timeframes to disrupt, to detect, to respond. You need to have appropriate governance. You need a whole of entity scam strategy. You need ways of recognising and dealing with vulnerable people. So that we don't have that at the moment, Senator. And so the important thing about the framework is that for us as a regulator, it will be, and for the ACMA and for the ACCC, who will also be regulators in relation to their sectors, it will be much easier for us to police and to hold banks to account, because the obligations will be, very precisely set out. So that's why we welcome that. At the moment, we are talking about it, we are laying out our expectations, we're observing good practice and bad practice, and we are talking about that extensively, but the codes will then give us the ability to police these very particular and granular observations in a much more direct way. So, we will welcome that.
I think I understand a lot more clearly now why that legislation needs to be implemented. Because I think Australians are getting the information at the front end, but you need to be careful about this. Clearly, there is some disruption going on that's been very effective, but we are at the edge of what could be a very significant step change in terms of lifting the standard everywhere for everyone. And I do think that that's Australians' expectations. So I think that's a very helpful discussion around that. We'll come back to AI a little later, but I'll return now to Senator Scarr to continue. Thank you, Senator Scarr.
Thank you, Chair, and that was very useful engagement. The next row in our table 3 is investigations, and again, I think the first row, preliminary investigations, commenced. We've had a discussion with respect to that and how it interacts with surveillances completed. We then have formal investigations commenced. Is there any additional commentary you could provide in relation to that?
Senator, in relation to formal investigations, these are matters that have gone through potentially a preliminary investigation or other referral, and we have determined that we want to use our compulsory powers, so to issue statutory notices, to exercise search warrants and the like. So I think what is notable about that figure is that we have significantly increased the number of formal investigations through the last financial year. Like all of our metrics, these figures do go up and down. So one of the things, I think we've talked a little bit about a decrease in some of the figures, and we may come to those, more of those shortly. When we file court proceedings or have matters referred to the Commonwealth Department of Public Prosecutions, that's not the end of that work for ASIC. So if we have a high number of matters in the court, that means that our investigators and enforcement and compliance teams need to support those matters through the court. So those resources are effectively running the matters with our lawyers and external counsel rather than doing new investigations. So what is pleasing now about the higher number of investigations we were able to commence over the last financial year, clearly those matters will now translate through, hopefully, into increased enforcement outcomes as those investigations come to fruition, and we work out whether or not it's a criminal matter to go to the DPP, whether it's going to be a banning or whether it's going to go to civil penalty proceedings. So perhaps that's my only final comment, Senator, is that we were just looking at the numbers for the first quarter of this financial year at our enforcement committee yesterday, and it's interesting to observe that higher level of formal investigations commenced seems to be continuing, just at least in that first quarter.
Excellent, thank you. Criminal actions. I might just start with the question. In the past we've talked about the number of briefs sent to the Commonwealth Director of Public Prosecutions and differences in figures on a year-to-year basis. I note there's been some commentary in relation to some of the questions on notice you've responded to, as well as in the submission. But I might just give you an opportunity, Deputy Chair, to update the committee with respect to those issues.
Yes, thank you, Senator. And I recall that you and I had a discussion on this at the committee. Forgive me, I can't remember if it was this committee or at Senate estimates, but in June we had a discussion on these figures. I think I should at the outset acknowledge, Senator, that our numbers of criminal actions have decreased over the last year or so, and I think I can't recall if we were talking about these figures, Senator, or the numbers of CDPP referrals when we last met. But I do want to acknowledge that they have decreased, and we have been examining internally, of course, the reasons for that, and we are very committed to increasing those numbers back to our normal operating amounts. I think it's also important just to recognise that we do have, and just going to my point about the resources required to support matters that are currently in the court, we do have 84 matters before criminal courts around the country as of today, which is indeed higher than our numbers of civil matters in the court. So those 84 matters that are currently in the criminal courts require, some of them are very complicated, hard-fought matters. Some of them have been appealed to the full courts of state Supreme Courts and indeed to the High Court and back down again. So each of those matters requires very intensive efforts by ASIC investigators to continue those matters. And unfortunately, that level of support does mean that those investigators are not free to be doing new investigations and new referrals. So the high number of matters that we are supporting through the various criminal courts are in part an explanation, Senator. And I think the other thing I've already talked about is just recognising some disruption to our investigations and enforcement work following the significant restructure we did in this financial year. And finally, and without wanting to over-explain or sound offensive, I think the nature of the matters we are investigating is becoming increasingly more complex and more sophisticated. So the matters that we take on, particularly in a criminal sense, they often involve very significant corporate collapses, very complicated corporate structural arrangements, many multiples of individual financial bank accounts and other accounts. Our forensic accountants spend countless hours and weeks analysing the flow of funds and where they have gone in a circumstance where things are set up and designed, obviously, to avoid that kind of tracing and analysis. So I think there is a combination of reasons, Senator, for the downturn on the numbers, but I wouldn't want to leave the committee with any impression that we are reducing our efforts or focus on the prosecution of criminal matters. Indeed, quite the opposite. And I am looking forward to working with our enforcement and compliance teams in that regard. So I hope that gives a little bit of context, Senator, for what you are looking at in Table 3.
And Senator, it's Joe Longo, but there was one point Deputy Chair Court made, a very important one that I want to amplify. I'm often heard saying that we're in court somewhere in the country pretty much every day of the week. So I just want to take a moment to give you some colour as of today. So on Friday the 18th of October, we were in the WA District Court on a committal a criminal litigation involving a gentleman called Mr. Skook. On the same day, there was a hearing in the Victorian Magistrates Court involving directors' duties. This is all criminal litigation. In Queensland, we were in the Federal Court on some civil litigation involving LAAMMC. On Tuesday, the 22nd of October, we're back in New South Wales with Brava Capital, again criminal litigation. On the 23rd of October, New South Wales Federal Court, ACBF Directors' Conduct, a case management hearing. First Mac Limited, again civil litigation on the same day, different state, a case management hearing in First Mac. And I can go on and on. This week alone, on Friday, today, the 1st of November, Joshua Fuoco, there's a case management hearing, a civil litigation matter. And in the WA District Court, there's a hearing involving directors' duties involving Mr. Dunlop, Mr. Dykes and Mr. Tawney. I get regular briefings every week. I get updated on where we are in court somewhere in the country. And so it's really important, the point Deputy Chair Court made, I think, because once we start a matter, that's, okay, we've started the matter, there's a lot of work involved in starting the matter and investigation, but that's almost a new beginning because once it's in the court system, there are appeals, there are interlocutory hearings. We have a very sophisticated court system in Australia, and people are often in fact, I'll finish on this point. On Monday, the 28th of October, in the Queensland Magistrates Court, there were 2 case management hearings involving Clive Palmer, Mineralogy, and Palmer Leisure Coolum. A very good example of a matter that's taken a lot of resources of ASIC to prosecute. That's litigation that's run by the DPP, and that's been back and forth to the High Court, Queensland Court of Appeal. So this is a very non-trivial subject when we're talking about maintaining the book of criminal and civil litigation that ASIC has.
Senator Scarr, did you want to respond to that?
Oh no, it's a very good and thoughtful answer, and I certainly appreciate that ASIC is regularly in our courts prosecuting their role. So I think I accept that. I've made comments in that regard before.
Do you mind if I ask a question, Senator Scarr, in response to what's just been said?
Sure.
One of the things that concerns me, and we've discussed it with audit, the committee will soon deliver its report on professionalism in accounting and ethics in accounting, that there is a huge expenditure of the public purse in undertaking the kind of work that you've just described at courts. Ms. Court, you talked about the need for forensic accountants, and I'll ask some questions about your engagement that you've identified for us in Quans about who you use from the Big Four and other entities to help you do the kind of work. Perhaps you can disavow me of this view, but I doubt that any of the individuals who are ultimately responsible for this mess that you are dealing with in the courts cooked this all up by themselves, created the loans, created the products by themselves, used a textbook about economics, and had no accountants involved, that they had no education about directors' duties and responsibilities, and that fundamentally what we're seeing in these actions is criminal activity enabled by skill sets that require professionals who are not being adequately punished, are being incentivised by profit making in their own interest to do things that are illegal, immoral, unprofessional, and are at odds with the law of the land. So when I see what you have to clean up, and I know that you can only clean up so much, you know, and like this looks like a good year to be bad, because if you're already busy, they might think, oh, well, this is a good year to be bad, right? So I put all this together and I go, isn't the prevention absolutely critical? And what about the professional standards of everybody, particularly the accountancy sector, that are fundamentally embedded in what you are overseeing? So I ask for your response to that, and what sort of a response is possible?
Well, could I just assure you, Senator, that the point that you make is a very fair one, that often there are professionals that are involved in the criminal misconduct that we look at. But I do
And when
want
you say professionals, you mean people who have the necessary education but are also registered with entities that they are required to be associated with?
Well,
what do you mean by professionals?
when I'd say the word professional, I was just thinking about a case that I was talking about yesterday, where ASIC has charged a lawyer, so and I know we've taken action against accountants in the past, and I'm sure I can dig up those examples. But this was a criminal case, where we have 4 individuals charged with criminal offences. And I won't go into the details for you, but the relevant point for your question is that one of the people that has been charged was the solicitor for the group, and he has been charged with aiding and abetting those that engaged in the primary conduct. So I think that's an example of where we look at a suite of misconduct or potential offending, and we're not just looking at those that are benefiting directly from the misconduct, but we are looking at, are there others,
in the ecosystem,
gatekeepers, enablers who should know better, who are advising to set things up in a certain way, or who are assisting the misappropriation of investor funds, which is frequently where we see it. So certainly where we have the evidence, we will absolutely hold to account, whether people are registered or otherwise. If it's an accountant, if it's a lawyer, if it's some other purported expert, well, they can absolutely be held to account.
So predominantly, who is it? Who are the baddies in this circumstance? Are they the directors of the companies who are failing their director duties, their fit and proper test? Is it the accountants? Is it the lawyers? Who are you taking to court, and what skill set is operating there? Like, you've just gone through all this, Mr. Longo. Who are these people that have perpetrated, criminal activity and civil failures in accordance with Australian law?
Again, I don't know if Mr. Longo wants me to jump. Feel free to jump in at any time. Senator, there's no whole answer to that. There's no whole of crime answer to that. Unfortunately, the perpetrators of financial crimes span a huge range from the most sophisticated, educated, qualified people down to mum and dad directors who are opportunistic and find themselves in a particular situation and end up on the wrong side of the law. I think our important...
So I know who would be easy to pick off, right? If you were going to actually go to court, it'd be easy to pick off the mum and dad, because you presume they might not have...
But we don't do that, Senator. Like, again, just to give the committee some assurance, I mean, we investigate a huge suite of matters without fear or favour, from the biggest end of town down to, relatively small issues. And interestingly, a lot of the concerns that we get in relation to action people want us to take, interestingly, often is at the smaller end of town, for the reason that a number of small business creditors feel like they are losing money owed to them by other small businesses, when the directors of those small businesses who owe money to other small businesses, effectively phoenix the money away or transfer it. So the demand for our work spans the full economy, or the full range of entities. And our job is to make sure that whether you're at the big end of town, you're in the middle, or you're a smaller player, that ASIC is there, and we are there. And as Mr. Longo has said, you look through our website on any particular week or month, and there is a long list of people that are being held to account across the board for engaging in alleged misconduct. So
Can I ask you to just have a look across maybe 3 months? Who are the enablers, like of people you've taken to court in the last 3 months, for example?
Well,
What's the shape
to
of
go along
that?
though, the idea of enabling is a very helpful concept, but in the end, individual companies, boards, people are going to take responsibility for their own actions, and they may be advised or inspired by lawyers, accountants, other professionals, other people in our economy.
It's hard to be a baddie at the top if you haven't got a few helpers along the way.
Yeah,
And I wonder how many of the helpers are the ones who are providing the schemes for these directors. Like, it's easy to get yourself a company and call yourself a director. We've had discussions before about necessary, training for understanding. But if you are a limited knowledge director, then you are very, very easily able to use the knowledge of others in perverse ways if you don't see any penalty. Like, I'm setting up the company, show me how to set up a business where I can make a lot of money and rip a lot of people off. And what's happening in that space? Because it seems to me there is a business model for people to shop their wares around, and the consequences are ASICs in court doing all of the things that you've described. Small businesses are being ripped off by unscrupulous players who are being enabled by people who call themselves professionals. So the whole ecosystem needs sort of some analysis and consideration about, where are the push points for prevention? Because there's no way you're going to be able to clean up everything, and the public purse can't bear the cleanup. It's like we need to get some seatbelts in the vehicles.
A lot of work to go
finance.
around, Chair, for everyone to maintain the standards we're looking for.
Yeah, but if we don't see it, Mr. Longo, like who are the enablers, I guess is my question, if I can put it that way. Who are the enablers who are making ASIC go into court? Where the shape of the problem in some way. I don't have any confidence that I have any insight into what that ecosystem really looks like, despite all the years that I've been on this committee. And I would really appreciate some advice or guidance from you based on the data that you have access to of what the shape of the problem is. Because if we don't ever describe it, we're going to keep showing up doing our day job, but we need some prevention in this space, I think.
I think, Senator, the nature of the problem really, or the nature of the enabler, to use your word, really varies depending on the type of entity and conduct that you're talking about. Commissioner O'Rourke was just reminding me that almost in recognising the point that you're making, one of our enforcement priorities that we announced this time last year was to really focus on gatekeepers who enable misconduct. So that might be auditors, it might be responsible entities who have a range of corporate entities that operate under their licence. It might be other what we call untrustworthy advisors. And one of the, particularly at the small business end, one of the big pieces of work that we've been doing is with AFSA, and I'll get their acronym wrong, the Australian Financial Securities. Anyway, the people that deal with personal insolvency, and so we work very, very closely with AFSA. And one of the things that we've been looking at, particularly looking at smaller entities, who are the people or the companies that are effectively providing unregistered or unlicensed advice that is effectively allowing companies to phoenix or dispose of assets. So that's an example where we're doing a very proactive piece of work. We're getting a whole lot of data and information in from liquidators and other people that are on the ground looking at things to feed into our data sources, so we can really have a look at and target who are the particular people that are enabling this work. So we do a lot of proactive work with all of our data streams and working with other agencies to try to systematically pick out who those problematic entities or people may be. So unfortunately, they keep reinventing themselves, and it is a bit of a whack-a-mole approach, and as soon as we remove some people from the system, no doubt others will emerge, but we are certainly very active in that area.
Thank you very much. We are scheduled to take a break at 11:30 to 11:40. We've pushed past that, so let's break to 11:45. And the committee will return with questions from Senator Scarr. Thank you. Resume, and I'll go to you for some questions, Senator Scarr.
Thank you very much. I'd just like to pursue that issue in relation to criminal prosecutions from a different perspective. One of the issues, and I can't remember which news article spoke about it, but it said there are constraints on ASIC with respect to the hiring of counsel and in terms of what ASIC is permitted to pay counsel, and that raises the issue in my mind. If you're dealing with large corporations, well-resourced defendants or litigants, they're going to hire the best of the best. And I'm interested in terms of your perspective as to whether or not there's a false economy in that regard in terms of could we get better results? And we're getting pretty good results, but could we get better results if that constraint wasn't imposed on ASIC, whatever that constraint is? And I don't pretend to be across it, but I just wanted to raise that issue to get your thoughts.
That's Joe Longo, Senator. Thanks for the question. I'll make some remarks and then I'll ask Chris Savundra, who was our General Counsel, has now just been appointed Executive Director, Enforcement and Compliance, and he and I have worked very closely on this issue. As it happens, Gina Cass-Gottlieb and myself have written on this very topic, as have our predecessors. The Commonwealth rates have not changed, I think, since 2012. It's true that we are well served. We work within a wide range of counsel. However, the rates we can pay, we are severely constrained by the Commonwealth caps, and we cannot pay commercial rates, and that does affect our capacity to sometimes work with the most senior counsel, and particularly in connection with our most complex matters, where we're often facing very well-resourced defendants who, of course, are not constrained by the Commonwealth rates. So I think this is an area where we've asked successive governments to sort of rethink the approach. Clearly, there's a public interest in ensuring that the rates we pay counsel are reasonable and appropriate. But I think it would be helpful for agencies like ours to have a little bit more discretion and flexibility for those cases where that really do warrant paying market rates. So I'll just hand over to Chris Savundra to see whether he might amplify those points.
Mr. Savundra, could you state your name, the capacity in which you appear today?
Yes, Chair. Chris Savundra, ASIC's Executive Director of the Enforcement and Compliance team. Thank you, Senator Scarr, for your question. I think you opened by mentioning criminal matters, and the constraints that ASIC's Chair just mentioned don't apply to criminal matters. So the relevant rules or regulations are contained in the legal services directions. And the DPP generally pays for, retains and pays for counsel, and they are not constrained. So I don't think the issue that has recently been articulated in the media and elsewhere is one that necessarily arises in the criminal space. It arises more in relation to the civil litigation that both ASIC and the ACCC pursue. The context for this is that the Office of Legal Services Coordination, which within the Attorney General's Department, is currently undertaking a review of the legal services directions. And it's in that context that ASIC and the ACCC recently sent a joint letter to the Treasury Secretary. And we do have a number of concerns in relation to the impact that those caps have on the ability for particularly ASIC to do its work. So the daily rates at which agencies can brief senior counsel remain capped at, under the directions, at 3,500 unless approval is obtained to move above 5,000 from the Attorney-General. And as the Chair said, those rates have not increased since 2011, and the 5,000 cap for seeking approval from the Attorney-General has been in place since 2006. The second issue is the gap between Commonwealth rates and Senior Council's commercial rates continues to widen. While in 2019 Commonwealth rates for Senior Council were on average 45% of Commonwealth rates, today for many of the more highly regarded and experienced Senior Counsel at the Commercial Bar, Commonwealth rates represent as little as between 1/4 or 1/5 of their daily commercial rates. There is also...
Sandra, could you put the commercial rate on the record? The top commercial rate?
As to the amount?
Yes.
Senator, it varies, but I think the top rate would be somewhere between 25,000 and 28,000 a day.
Thank you.
There is an administrative burden also, so particularly where ASIC is required to make applications at higher rates, and if there is urgent matters that we need to attend, such as injunctive matters, it can have an impact, particularly given the time it requires us to firstly make the application to the OLSC and then for the matter to be escalated to the attorney. We are, however, working very constructively with AGD as part of the review, articulating the issues that we face. I think the final point I'd want to make is just what's different for ASIC and the ACCC. You know, why is the position impacting ASIC and the ACCC more than perhaps others? I think the first point to make is that a primary purpose and function of both ASIC and the ACCC is to pursue court-based law enforcement. So civil penalty action is a predominant tool that both agencies use. The second aspect, which is coupled with that, is that we use the commercial bar. We don't use the government portion of the bar, which other government agencies might use. So the commercial bar predominantly work for and service the top end of town, very much those that we regulate. And they have deep experience and expertise, and that is why they command the rates that they do. So we are keen to have counsel that have that deep expertise, given how complex our matters are. Nevertheless, and despite those caps, we're very grateful to the counsel that work for ASIC. They undertake our work very professionally and at a significant discount to their usual rates.
Chair, can I just go back?
Mr. Longo?
Yeah, it's Joe Longo again. Mr. Savandra made the point about the DPP, that I think just to complete the story there, and I'll ask Mr. Savandra to amplify this point, the DPP is budget constrained. So their capability to pay commercial rates is constrained. The source of that constraint may not be the legal service, the caps, but they're definitely constrained. So that's a sort of a discussion that I've noted, I think, before this committee earlier in the year when we were talking about this subject more broadly, and with Senator Scarr's indulgence, we were talking about, you know, working with the DPP, and so if we want more criminal matters run by the DPP, we're of course not the only agency that refers matters to the DPP, then we have to sort of think carefully and constructively about the DPP's resourcing, and I think this is an area that it is worth looking at, and if the committee had an opportunity to speak with the current DPP about resources, I think you'll hear that that organisation could also benefit from an approach to resourcing that will enable it to retain very senior counsel for the appropriate matters, by analogy in the way Mr. Savandra has described for civil matters. So it's a significant topic. It's a significant practical topic. But the only other thing I would say is to amplify the last point Chris made, Mr. Savandra made. We are well served. Our council work very hard on our matters, and for that we acknowledge that as well.
Okay.
Senator Scarr.
Well, thank you, Chair, for that, and Mr. Savandra, thank you for that answer, and congratulations on your new position as well. Well deserved. So my concern in relation to this space, and I think we've noted the comments about the CDBP and its constraints, and that might well be something this committee considers calling them in and exploring that, but that's something for the committee. In terms of the civil matters, the concern I have, to be frank, is potentially you're dealing with matters worth hundreds of millions of dollars. So the financial quantum, there would have been the sunk cost, if I can put it that way, which doesn't really give it justice, but I'll use that term, in terms of the investment in an investigation and in preparing a case to take to court. And then there's also the precedent value. So every one of these major cases that goes through our legal system sets up a precedent, potentially, with respect to conduct and behaviour in our financial markets. And I would have thought if there was more flexibility provided with respect to the civil cases, and that's done in a administratively appropriate way, that might well mean that those larger matters or more complicated matters are well resourced, because presumably you've got a range of matters somewhere, especially if you're going to the High Court on appeal, you would like the best of the best. And then at the other range, you've got maybe matters in the magistrates' court, etc., where you typically would use junior counsel. So I'm interested in your response to those remarks.
Senator, I think we would agree with those remarks. Having said that, I think really all we're seeking is additional flexibility. Value for money is obviously a critical consideration for ASIC as a Commonwealth agency, and by no means would we be looking to pay commercial rates with these counsel. And I think there's, I think we are an attractive proposition for council to work with. Our work is the most complex, and it's really second to none. It's some of the best work going around. So I think we do have some pull, but really all we're looking for is, I think, some additional flexibility. By no means are we looking to pay commercial rates.
Okay, thank you for that. That's been a useful discussion. If I can go back to our trustee table 3, so congratulations to whoever prepared table 3. Can I move to? We've talked about the criminal outcomes. Can I? Just one comment in relation to the fines. The fines seem, given the number of matters, to what extent are the fines at the towards the upper end of what's permitted? Can you give us any insight with respect to the fines that are levied?
Senator, it's Deputy Chair.
Can we just hold for a moment? Senator Pratt, I believe you may not be on mute.
Thank you, Chair. That was an accidental unmute. Please note I have been listening carefully where I'm able, and look forward to participating later.
Thank you very, very much. So I'm assuming you're going back on mute, and Senator Scarr, your question is now being answered by Ms. Court.
Yeah, thank
you.
Thank you, Senator. I think Mr. Savandra may want to elaborate on this as well, but I think it's fair to say that the fines imposed by the criminal courts are a lot lower than in the civil courts. Now, part of the reason for that, Senator, is that the matters, the criminal matters that are reflected there are predominantly against individuals, and so the maximum penalties that are able to be imposed for misconduct by individuals is significantly less, whether it be civil or criminal, than the penalties that can be imposed on corporations. And I think the other issue is that a lot of these matters are in the magistrates' court, local courts or district courts, and so the penalty is more likely to be, the significant outcome of a criminal matter is more often than not a conviction, and that is what people, do not want against their name, rather than the penalty itself. So it's the fact of a conviction. Clearly, the impact of imprisonment is a very significant deterrent, and in the criminal system, pecuniary penalties are much less of a deterrent outcome than they are in the civil proceedings, where, of course, the imposition of significant pecuniary penalties is the deterrence, whether specific and general is the main reason for courts to impose pecuniary penalties in the civil jurisdiction.
Okay, understood. And I mean, just to amplify that point, footnote 11 says in relation to the $936,000 penalty, some $820,000 of that was imposed on members' equity banks. So if my math is correct, that would bring the total 23-24 total down to $116,000.
That's right, Senator. So the more significant number in relation to criminal outcomes is the number of people or companies, and they're predominantly individuals, that are convicted.
Yeah, okay. All right, if we could move on to the civil action section, and I understand to some extent that the number commenced is important, because that indicates things which are more within the control of ASIC rather than civil litigation completed, which to some extent depends upon whoever the response of the person against whom the action's brought and the judicial system. So there's been an increase year on year in terms of the new civil litigation commenced. Any comment on that?
No, I agree with your observation, Senator, that is the most significant metric in relation to civil actions, and that is what is within ASIC's control. I think that just tells you that we are largely staying around. It's largely like for like this year to last year. I think we generally hover around the sort of 60 to 70 civil matters a year, and those are predominantly all matters in the federal court, so very significant superior court litigation.
Okay. Do you have a KPI for that? And I'm not necessarily saying you should. I'm just interested to know, is there a KPI?
No, we don't set ourselves a KPI number for new court actions or new criminal matters. And I think, Senator, it really sort of goes back to some of my observations earlier, in that I very much accept that these metrics are an important objective measure of ASIC's output, but they're certainly far from the whole story. So each one of these 69 new matters can involve a range of complexity, numbers of contraventions alleged, number of consumers or investors impacted. So one can be a fairly straightforward misleading and deceptive case, or one can be a very significant allegation relating to significant corporate governance failures in an ASX listed corporation, for example. So we don't we don't set ourselves KPIs just recognising if we were driven solely by numbers. I think that creates its own incentives. What we do, though, Senator, in terms of holding ourselves to account, and again, I think we've talked about this before at the committee, we do identify publicly, and we're about to do so next month, our priorities in enforcement for each calendar year, and we set out those areas in which, based on our intelligence, our data, our stakeholder feedback, our various consultative panels, the things that they are telling us that are important for ASIC to focus on. We do outline what those priorities are, and we certainly aim to hold ourselves account to delivering against those priorities. So if we identify greenwashing as an enforcement priority, or enforcing the new design and distribution obligations, for example, we do want to make sure that in the course of the calendar year we are taking enforcement and compliance action, filing court proceedings, issuing infringement notices and the like, and report back against that. But in terms of, as I say, it's a long answer for your simple question, but we don't set specific KPI numbers against the number of matters that we want to file for those reasons.
That makes sense to me, Ms. Court. I need to raise the issue in terms of the civil litigation completed successfully as a percentage. There was a material change in that. Any observations?
Yes, Senator, I'm actually counterintuitively somewhat pleased to see that. For this reason, I think a regulator that is achieving consistently high, a consistently high percentage of wins might be accused of only taking sort of the easier cases, you know, the low-hanging fruit. I think both Mr. Longo and I have talked often about the importance of a regulator really testing the boundaries of the protective legislation that we administer. So the Corporations Act and the ASIC Act have very significant provisions in them to ensure that consumers and investors are protected and that our markets operate fairly and with integrity. And we continue to see new forms of conduct arise that we need to take on as a regulator, and part of our job is to test the boundaries of those protections. So one example, and I think within some of those figures, Senator Scarr, we've taken on a number of matters in the last year or so relating to cryptocurrency. And one of the very sort of pertinent issues that we are grappling with in cryptocurrency, recognising ASIC's jurisdiction is limited to financial products and financial services, is, well, when is a cryptocurrency or a crypto asset a financial product? And so we have quite deliberately taken on some cases in that area where we are of the view that a particular product looks like a financial product and smells like a financial product, and we think consumers and investors assume it's a financial product, but given the way that the definition of financial product sits in our legislation, perhaps the issuer of that crypto asset is of a different view, and is of the view, for example, they don't need to be licensed with us as the regulator. So we have taken on 4 or 5 cases where we have some concerns that a product may cause consumer or investor harm, and we've won some and we've lost some. But I think that is a sign of a regulator doing its job and being willing to test the full extent of the laws that we have. By saying that, Senator, I should add, though, I don't mean we should be reckless as to this. I mean, where there's clearly not a case to be had, and we still need to run our cases with integrity and professionalism. But so long as we do that, and if a court ultimately finds against us, then I think that is the independent arbiter of the issue in dispute doing their job, and that sends a helpful signal both to us but also to those that we regulate as to, if you take the crypto example, you know, what's in and what's out.
does raise in my mind that question about senior counsel, availability of senior counsel, though.
Yes, Senator, I completely agree with the observations of Mr Longo and Mr Savandra. There is no doubt, and I get this feedback on a reasonably regular basis, that there are counsel who would otherwise be very keen, very good counsel that would otherwise be keen to do ASIC's work, but just simply are not able to take the work on at the rates that we're able to pay under the legal services directions.
Yeah, whereas the parties on the other side of the litigation, it's free rein to get the best and the brightest, and more particularly people who have that experience at the senior court level, especially when you're going to full federal court and high court. That would be the concern I have.
And Senator Scarr, I know Mr Longo and Mr Savandra both said this, but that should be no reflection on the council that are doing our work. As Mr Savandra said, we have extraordinarily gifted council doing our work, but they have a lot of work on as a result, and we need to be able to spread that work more broadly.
Yeah, and I'm not seeking in any way to comment on the existing council. I suspect they're actually forming the basis in terms of the work they do for you for their next step.
Yes.
In terms of through the profession, I'm sure.
And Senator Joe Longo again. I think there's one theme I'd like everyone to take away from the discussion we've had this morning about council fees. It's the idea of flexibility. If we were just given just a little bit of flexibility for relatively small number of cases where we think these higher rates are justified, then I think that would go a long way to addressing some of the concerns, because as Deputy Chair Cord and Chris Savandra and I are saying, we get a lot of commitment and diligence from council. What we're really asking for is for a relatively small number of cases, we would like the flexibility to be able to pay what we think is appropriate, given the complexity and significance of the matter and the need to really have available to us the best resources of the bar, but it's a relatively small number of cases.
Yeah, well, I think there's a lot of merit in the point you make. Can I move to the quantum of civil penalties? Again, there's a material difference between 2022-23 and the subsequent financial year.
Yes, Senator, that number really will vary year on year depending on the nature of the matters that we have brought. I think from recollection, in the 2022-23 financial year, there were some particularly significant penalties. For example, one I'm thinking of was a penalty imposed against the insurer IAL, which was in the amount of $40 million, which was a record penalty to be imposed against an insurer at that time. And I think there were a couple of other particularly large penalties, Senator, in the 22-23 period. I guess the only other comment I would make is that we are continuing to press the court to impose higher penalties. The Parliament introduced new legislation in 2019 that very significantly increased penalties available against large financial institutions for the kind of misconduct that we are grappling with on a daily basis. And so we recognise the significance of high penalties as a deterrent, both general and specific, and we will continue our work in that regard.
Thank you. In terms of actions against auditors, there's a subsequent outcome section of this table which I'll walk through when we get to it. People disqualified or removed from directing companies, that doesn't seem to have changed much year on year. I think a perennial theme, if I can put it that way, Senator O'Neill, in terms of this committee is, given what we're seeing in the market, are sufficient numbers of people being disqualified or removed from directing companies? Because we seem to see people directing companies who simply should not be directing companies, and some of them reappear in different manifestations. And one of the easiest way to protect the investing public from those people is to make sure that they can't be directors of companies. And sometimes, as I understand it, some of the penalties are just for certain periods of time, so they can come back and be directors of companies. Do you have any thoughts or commentary in relation to that?
Senator, only that we agree with you that it's very important for people that engage in sort of particularly repeated misconduct. We see the same people arise from time to time as well. We have an active program of targeting or investigating those people that come across our radar on a number of occasions. In terms of the point that you make about the duration of a banning, I think I'm right to say that the maximum amount that ASIC can disqualify a director from being involved in managing companies is 5 years, and that figure is imposed reasonably often by the delegates of ASIC that are making those decisions. And the only other thing I would just note is that those decisions can also be appealed to the the former Administrative Appeals Tribunal, now the Administrative Review Tribunal. It's changed its acronym, and often are. And so there is a very significant piece of work that goes into investigating and persuading delegates, and then subsequently, as necessary, the tribunal as to the need for lengthy disqualification orders. But we certainly agree with you. In relation to the more significant misconduct that we see, of course, those matters are prosecuted, and a number of the criminal outcomes that I've already talked about relate to directors that have engaged in what in our view is criminal misconduct, and who should be convicted for that misconduct rather than suspended from being involved with financial companies.
Senator Sky, it's Kate O'Rourke. If I might just also add, we've been working on issues in relation to insolvency, have identified through some of the consultation processes that we've had in relation to the information that comes to us from insolvency practitioners. Much of that concerns identified problems with directors in the insolvencies that they are administering. So that consultation process has, as well as helping us improve our guidance, which is Regulatory Guide 16, on that information that's provided to ASIC, has given us an insight into things that we can do internally as well to make sure information about directors is being analysed and triaged well in ASIC. So we're taking that those steps as well.
Okay, thank you. Chair, I'm about to go into this question of auditors as a subsequent outcome. Do you want to share the call? Or?
I do actually, if I can. I think Senator Pratt is with us from Western Australia. I might give her the opportunity to ask a few questions now.
Thank you, Chair, and to ASIC. And thank you for the thorough update on centre pay. I want to thank you for the work that's gone into that. You've noted that centre pay deductions are continuing for some existing contracts inside the centre pay system. I guess I'm keen to understand what consumer regulators, yourselves, and the Department of Human Services should be looking at in that regard, as to, whether for example, people have paid more than the goods are worth, and what kind of other remedies. If you can just draw a picture of the limit of your role for me in terms of consumer outcomes, or, you know, on one hand, you're preventing and very actively preventing new people being enrolled in such programs. I'm also keen to understand what remedies might exist from those who have experienced consumer harm.
Thank you, Senator Pratt. It's Alan Kirkland. I might start first with the part of your question that's about the limits of our role. And it's fair to say our role is quite limited in relation to centre pay deductions. So we don't have any specific role in relation to centre pay under any of the legislation that we administer. To the extent that we sometimes have a role, it's where centre pay deductions might fall within, might be sent as a credit facility or another type of financial service. In relation, we've got power, particularly that's arisen under the design and distribution obligation regime, because it adopts a broader definition of some of those products than some of the other legislation that we administer. So it's only if, I guess in the sort of case...
I guess that's what I also have in mind. So yes, thank you, Mr. Kirkland. I also have that kind of frame in mind. So yes, in the instance where you do see those breaches, how might you apply a future remedy, or is it simply to stop the products from further distribution?
So generally, the sorts of actions that we've taken have, and the most high-profile one which we've discussed, or the most significant one which we've discussed here before, is in relation to Coral Coast distributors, and that involved applying a final stop order. And as I think you acknowledged in your initial question, the impact of that stop order is to prevent Coral Coast distributors from entering new arrangements with customers, relying those centre pay arrangements that were the subject of that final stop order. It doesn't necessarily prevent deductions continuing for arrangements that were entered before that stop order came into place. So that is one of the limitations of the use of that power. There might also be cases where for different reasons, we might apply a stop order where a target market determination is defective, and the impact would be similar there. But I think what's important is that we have a very constructive and open dialogue that has indeed improved over time with Services Australia, and I know that they are looking very closely at a range of these issues as part of the review of the centre pay system that's currently underway.
And I do appreciate that this is beyond your scope in terms of your powers. I'm presuming that Department of Social Services and the centre pay people could, for example, work with the ACCC to see if other consumer laws had been breached in that context as well.
Depending on the particular conduct, there might be cases where laws administered by the ACCC have been breached. Although I think one of the things that I think that we've been working with Services Australia on as part of the review process, or at least suggesting to Services Australia as part of the review process, is that if there is a robust regime for assessing which businesses can operate on the centre pay system, and for Services Australia to be taking its own action where it can identify inappropriate practices that are harming Centrelink payment recipients, that it's in a better position under the centre pay scheme to be taking action. And I understand those sorts of issues are very much front and centre in the review that's currently underway.
Thank you. That's very helpful. I can see that you've had civil penalty proceedings against Rent or Keeps. I guess I'm keen to unpack the franchise structure of that, noting that, for example, historically, Centrepay had a lot of those different franchises listed at the same time as ASIC has prosecuted a number of them or issued orders or statements of investigation against a number of them. How are you capturing the overall standards in lending arrangements as leases or goods that customers were not entitled to keep when they did in fact keep them?
Senator Pratt, I think the answer would be that it really depends on the particular business model. It may well be that Ms. Court would like to add some comments after I've said this, but it really does come down to the individual business model. And so we look closely, many of these cases that are, come to us as a result of reports from consumer advocates and financial counsellors, and we get those as reports of misconduct through our front door, if you like, but also through our Consumers Consultative Panel, where we have a regular dialogue with people who are helping people on the ground with these sorts of problems. But then if we investigate a matter, it's really a matter of understanding the particular business model and which aspects of it may involve contraventions of laws that we administer, and then which entities may be involved in those contraventions. So it's very hard to give a consistent answer. It really hangs on the particular business models involved. But as reflected in some of the earlier questions, responses to earlier questions, we really look at the entire set of conduct and we consider, which range of individuals and entities are involved and how serious is their involvement, and what does that mean about the action we take against potentially a range of individuals and entities.
Okay, so that makes clear sense to me. I guess I'm interested in knowing to what extent those business models might be driven through the national franchise system, or to what extent they do in fact vary. And clearly you have to go about the very difficult work of working out the extent to which they might vary or not. I guess if you had a complaint about a particular provider, for example, and you investigate all of those, that's not to say that some of the same elements of that conduct might not be driven by the national structure, which clearly you're also interested in.
Sarah, Ms. Court.
Thank you, Senator Pratt. It's a very good point you make about the franchise model, and I was just going to note that in that case that we have won now against Rent for Keeps, one of the things the Commission determined when we took those proceedings was the importance of taking legal action not just against Rent for Keeps itself, but also in relation to their largest franchisee, which was responsible for, we alleged, a large number of the problematic lease agreements. And indeed, our case involved more than 500 so-called lease agreements with customers, many of whom clearly were vulnerable people from low socioeconomic backgrounds. And the case we were concerned about there, and one that issues we continue to be concerned about, are where we have business models that are really designed, in our view, to get around the very important credit consumer protection laws. And so in that case, the judge found that both Rent for Keeps itself, but also Duranda, which was the largest franchisee and what's described as the Victorian state master of around another 12 franchisees, that both of those entities had engaged in unlawful conduct and breached the consumer laws. Hopefully, by taking that action against a head franchisee, sends that message to other franchisees in the group who are smaller that the conduct they are engaging in is unlawful and does breach these consumer laws. Of course, in the event that they persisted engaging in conduct of that sort, they're very clearly now on notice as to the unlawfulness of it, and that gives ASIC, an important, what's the right word? Because they're clearly on notice, if we take further action against some of these other franchisees, then the penalties that we would be seeking from the court will be all the greater.
Yes. Thank you very much for those answers. That was very good to have that overview. I wanted now to ask some questions with respect to scams and banking. And indeed, your brief to us and your annual report talks about the significant variability in the maturity of scam strategies and governance. Now, I've raised this issue in the past, and it seemed to have fallen in a way that seemed it was outside your remit because it was not perceived as a scam, but rather as credit card fraud. But I'm interested in trying to find out how I would find out to what extent banks are or are not refunding customers for such fraud, whether or not they identify it and make a claim for it.
This court. So, sorry, Senator, just to clarify the question, this is a circumstance where the customer of a bank has been the victim of credit card fraud?
Yeah, well, I guess it's the kind of circumstance which I've certainly seen occur where you might have multiple fraudulent dating sites come up in someone's bank statement, making regular deductions. And if you were to visit the website behind that, you would absolutely see that there's no actual service behind it and that the customer had never sought such service.
So I think that probably falls slightly outside of the scam description, but I think, and I don't know if Commissioner Kirkland or Commissioner O'Rourke could be able to help me here, but I think, Senator, the answer to your question is likely to lie in the banking code, because if there are unauthorised transactions on your credit card, then my understanding is that all of the banks will refund those transactions.
Yes.
Having had personal experience of this recently, one of the practical difficulties of that is I think it will require the cancellation of the credit card. So if the bank determines that your card has been compromised in some way and you are getting regular deductions made that are unauthorised, then, as I understand it, they will refund the money usually following an investigation of some kind, but it will also require cancellation of the card and the inconvenience obviously associated with that. But is that the circumstance, Senator, that you're referring to?
Yes, absolutely. And I guess I'm interested in what regulatory oversight we have of that. I note it is part of the code. It seems to me it hasn't been part of the surveillance in relation to scams, and correct me if I'm wrong in that regard, but I suspect that this is happening to a significant degree where consumers are not indeed making claims to get that money refunded, and that the level of deductions can build up quite a lot in a way that's unresolved by the bank or the customer.
Senator, so far as I'm aware, we haven't received any systemic notification of this being an issue, and the consumers who are not appropriately dealt with or responded to by their banks would then have the right of a complaint to AFCA, and if this was an emerging issue or a systemic issue, either across the sector or for any particular bank, then I'm confident that AFCA would notify that to us. But it's not something, unless anyone else at the table has a different view, that has come to our attention in recent times.
I guess I'd be grateful if you would ask them, because you need to be a fairly organised consumer given the administrivia that Australians face in day-to-day life to get on top of those kinds of deductions, cancel your cards and get your money back. You may well just stop using a card and never get yourself organised to get such a deduction refunded. And I'm not sure it's motivating banks enough to get on top of stopping these kinds of deductions from occurring to start with.
Senator, I may be missing some of the nuance in your question, and without wanting to be any form of apologist for the banks, but is the issue there that the bank is unaware, if the customer, and I certainly understand that you need a certain degree of either time or financial literacy to carefully look through credit card statements, but if the bank is unaware of the fraudulent nature of the deduction, is that where the challenge might arise, that they would need to be notified as to the suspicious or fraudulent transaction?
I would suspect, so I'll give you the examples from my own bank account. I tried to log on to my bank and report them through the chat and get on top of them that way. I've partially filled out the form, but if you were to follow through, there's half a dozen different dating websites that if the bank had surveillance over clicking through on the domain names, I think there were things like fancy.com or forkeeps.com, like a whole range of different websites. But if you had looked them up and seen any kind of systemic pattern across banks, you would see that each of those websites was fraudulent.
I see.
And I guess I might be one unlucky consumer in the whole of Australia who's been where those kinds of websites have got hold of my bank details, but I'm trying, or it's my credit card number and CSV and date, etc. Or there could be something really systemic going on that I can obviously tell because when I looked into it, it had been going on for months and I could see the deductions for many months. They hadn't picked up, and I don't know if they're not picking it up for other consumers, and I was just unlucky.
I understand. No, I understand the point, Senator Pratt, and certainly we can certainly in our regular engagement with the banks ask them about the issue that you've raised.
I think as well as asking the banks directly, Senator Pratt, it's Kate O'Rourke, we can, as you alluded to, touch base with AFCA to see whether they're seeing anything in the space that you're describing. And then the third area would be the Banking Code Committee compliance arrangements that sit across the banking code as well, because they too have information relevant to some of the concerns that are arising from activities that are governed by the code. So we can take those steps.
Yeah, I certainly reported it also to ScamWatch, but I just don't know the extent to which that kind of practice can be quickly jumped on and prevented and what's going on with it. I think the presumption is that the banking code is working and that consumers can get their money back, but I guess I don't have that much faith, and I'm really concerned that a great deal of money is being stolen from people this way.
Understood, Senator.
Chair, I might leave my questions there now till after lunch, or I can keep going. I wanted to ask some questions relevant to our inquiry on financial abuse.
Thank you, Senator Pratt. I might just take us to lunch at 1 p.m. with a few questions general in nature. And we'll come back with a line of questioning you've indicated, and I've already indicated some on AI from me, also some questions to the questions on notice responses. But can I go to the ASIC annual report, page 219? At that part of the report, I'm just going back. Also, I've got questions on audit, like Senator Scarr has, so that's what's coming for the afternoon session. Page 219 indicates that no significant issues were reported to the Minister about non-compliance with financial law. What type of problems or incidents would trigger a report to the Minister, and how many have occurred in the past 5 years? And I'm kind of thinking in the context of the questioning that was just demonstrated there by Senator Pratt, the rent for keeps matter with consumer credit law? Like, there's a systemic issue there. It's an intersection with franchising and franchise law. Would that be an example of the sort of thing that could trigger a report to the Minister about non-compliance? What's the bar?
I'll stand to be corrected, but I think this is compliance by ASIC.
Yes.
So, yeah, this is not about the system. This is about ASIC's compliance.
Okay.
I'll hand over to Mr. Savandra.
I think that's right, Chair. I'm not sure whether you could direct us to the relevant paragraph, but I think this is about
Under other reports.
Page 2, significant reports from ASIC to the Minister. This is generally arises under the PGPA Act and Section 19 of the PGPA Act. So it's about matters, notification of significant non-compliance with finance law.
Yeah. Yep. So
So this is ASIC complying with the finance law.
not your observed
No.
behaviours in the marketplace. Okay. So are there any instances of the kind that's just been raised by Senator Pratt where you would create a brief to send to the Minister to identify particular trends, or would you deal with those by putting out a statement to the market more generally?
Well, the finance law is a law that applies to the Commonwealth, to us. As I understand your question, Senator, compliance with the law generally, in the criminal code, federal criminal code, state criminal statutes, laws of a financial nature covers a very wide area.
Yep.
This topic is quite specific to us as a Commonwealth entity.
And I understand that now from your response, so thank you. That clarifies that.
But I just answer your broader question. I'm not aware.
Yeah.
We don't generally report in that way, if I can put it that way.
I think, I was just going to say, I think, Senator, from time to time, when we see emerging issues in the market, and it could be in things similar to that Senator Pratt was talking about, we might well put up a brief from time to time to a minister's office to alert the minister. We might put out a media release, or we might otherwise brief. So we've got some, particular significant investigations, for example, that are underway at the moment that we would put the office on notice of and put Treasury on notice of from time to time. But it's not it's certainly not on every occasion that we see misconduct. I think our more normal way of approaching that would be to put out a report, like our scams reports that we've talked about earlier, our hardship report. There's a range of that work. Or if it's an issue that we want to alert consumers to, certainly we have a power to put out a public warning notice, which we don't use often, but we have that ability. And we also often will put out a media release, if it's a scam, for example, an emerging scam, we might report that to the NASC, and that will become a scam watch notification. And we also regularly release on our own channels and our own website where we see some kind of emerging misconduct that we want to warn consumers or investors about.
Okay, thank you. And with regard to this financial law requirement to report on yourself if there were such a breach, what sort of problem would be the kind that would trigger a report to the Minister?
Well, there's a whole range of obligations imposed on me as accountable authority and on ASIC as an entity under the legislation.
When was the last
procurement
time?
rules, a whole range of arrangements. I don't know whether Mr. Savandra can give me a bit more, give some examples, but it's of that nature.
Okay.
Yeah.
So it does cover procurement, for example, and I've got
Yeah.
some questions on that as well. Yes.
It does, Chair. So if it's a significant issue that affects ASIC, particularly from a financial perspective, or any contravention of the finance laws that are applicable to ASIC, which is predominantly the PGPA Act,
Yep.
then we would notify the minister. Not all breaches, but significant. It would also include breaches of general duties by ASIC officials and the like.
Okay. So when was the last time such a significant issue was reported to a minister?
Chair, I'd have to take that on
That'd
notice.
be fine. Thank
Yep.
you. Thank you very much. Can I also go to page 218 in the annual report, where you indicate that you did not conduct any joint inspections with the US Public Company Accounting Oversight Board, the PCAOB. We know that the PCAOB was very significant in imposing fines when fines were not instituted by any Australian entity with regard to behavioural inappropriate practice by both KPMG and PwC. What types of issues or incidents would trigger a joint investigation between ASIC and the PCAOB, and how many have occurred in the last 5 years?
This is a rarely used, this is John Longo, it's a rarely used provision. I do remember asking the team about it. We're required to report under the Act, which is what we've done again in the annual report. The circumstances that give rise to this kind of inspection are very rare. I don't know whether Mr. Savandra or Mr. Yanko can give any more colour on that, but we're happy to go.
It states here that it's required by section 136(1)(c) of the ASIC Act.
That's a reporting provision.
Yeah. And is there any limitation on what you could do with the PCAOB, I guess is really where I want to go. Because I know they acted, and there was not action in Australia. The only reason that there were any fines for the testing scandal with KPMG and then the late reporting of the PwC, Peter John Collins matter, was because an American supervisory entity, the PCAOB, funded in quite a similar way as ASIC is to do auditing and observance work, took action against the Australian entities of those global brands.
So I think, and I understand you mentioned earlier there will be some questions in the afternoon as well with respect to audit more generally, but I think this issue goes to the, if you look at the comparability between the regulatory provisions that apply to audit firms or auditors in Australia and the US, they're not comparable. And so to the extent there's regulatory arrangements that apply at the firm level in the US, there aren't equivalent regulatory arrangements that apply in the Australian framework, and I think that's the subject, no doubt, of your own committee's inquiries, but also the Treasury consultation process that's underway about suitable regulatory requirements that apply to both auditors and audit firms. I can assure you, though, that the working relationship between ASIC as the audit regulation authority in Australia and the PCAOB is strong. One of our staff is there with the PCAOB this week, so it's not a relationship gap. I think we might serve you best by taking on notice any observations we can make about whether there's been, with respect to your particular question about joint investigations, if there's any observations we can give you on why there haven't been any particularly.
Yeah, well, certainly not in this report. When
And
was there ever?
Yes,
and were there opportunities where that could have been enlivened, where it was not enlivened? And given the sort of quasi-regulatory role of the professional bodies that are engaged in that and the committee's work to that end, where we hope to land our report and produce it very soon, it would be very helpful to get some of your insights, if you could, rather quickly, about what are the opportunities for you to interact with what's colloquially called over there the peekaboo regulator, because it can just show up and declare that and have a look at the books in a randomised way that seems to have a very significant deterrence. Also, it seems to require registration with them before people can act in the market, which doesn't seem to apply here in Australia. Is that correct?
That's right. The firm level registration is the key point that we've identified in earlier hearings as being something that we have described as a gap. I can say that...
Have you raised that with Treasury in your inquiries?
Yes. Yes, I mean, we've raised it publicly. Yeah. And we, have... I'm certainly not aware of us actively contemplating a joint inspection in the last 14 months, which is when I've been working here, and deciding to decline to do so. So we will look further into whether there were other opportunities or indeed other actions done jointly, absolutely, but it's not something that we've kind of declined to do.
I'm going to come to some more questions on conflicts of interest, but it's 4 minutes to 1, so we're going to break very shortly. Can I just observe that conflicts of interest seem to be of concern to you in some of the materials that I've read here? Certainly they're concern to the committee. We have observed a failure to report conflicts of interest, and in some of our most recent hearings, for example, with Mr Burrows, who is the CEO of PwC, his undeclared second income of $1.2 million to do a contract for PwC Global, at the same time as he was being paid $2.8 million per annum plus bonus to be the CEO of PwC Australia, which he didn't declare to this committee until it was sent as a question on notice sometime later, was not observed by Mr Burrows as a conflict of interest. In the absence of it being observed as a conflict of interest by Mr Burrows himself or by the governance board at the time of PwC, and because of the governance structures in place, Ms McCahey, the PwC risk management leader, was unaware of that conflict of interest. Now, I guess if I give you that as an example of a conflict of interest at the highest level of one of the big four auditing companies so vital to the proper function of our markets, unobserved, unreported, kept from the risk and ethics provider, who at that very time was required to report to the Tax Practitioner Board on conflicts of interest, which was declared by Mr Swikowski as one of the major governance and cultural problems of PwC. How much worse does it have to get before an opportunity for ASIC to work with PCAOB, the US entity, to deal with failures of professionalism in this sector? I mean, because to me that really smacks of a failure to identify conflicts of interest, and it seems an opportunity for some collaboration internationally. Just seek a response to that.
I can certainly respond first, Kate O'Rourke. So I think you're right to say that we too have been concerned about conflicts of interest and have indeed highlighted this as an area of particular attention in the financial reporting and audit program for this financial year. So we've, on Wednesday this week, issued a information, both a report, which was backward looking, but also launching the activities for this current financial year with a particular surveillance focus on conflicts of interest and independence for registered auditors. So it is an area of interest for us. I can just pause to say, in terms of the backward looking piece, you'll see in the report that we issued on Wednesday some work that we did in the last financial year looking at ASQM1, which goes to management of risks and governance at the firm level. That was a voluntary look on ASIC's part. We don't have a regulatory hook in relation to that, but we did make some observations around that aspect, which highlighted conflicts of interest as an area of concern. It's obviously been highlighted elsewhere as well. In relation to the forward-looking piece that we've just commenced, our conflicts of interest work is anchored to statutory provisions on auditors that currently exist, and must be understood within that wider piece that we've just touched on, that there are gaps in the regulatory framework, whether they be at the firm level or otherwise, that I think are being actively considered by your committee and elsewhere. So the anchoring provisions on conflicts of interest that we are looking at are quite specific. So I might take on notice whether they would capture the conflict particularly that you've described between duties to an Australian entity and an international entity by virtue of having two salaries. What I can I heard that, but what I can say is that the conflicts requirements that we have statutory provisions in relation to go to particularly the relationship of or risk of conflicts if there's undue closeness between the auditor and the company being audited. So, for example, tenure, also relationship between non-audit firm fees and audit fees, and also whether there's an actual relationship at a personal level, like someone used to be an auditor and is now on the board. So I might just pause there. I understand you're looking at the clock, but it is an area.
I have got that report, and I have got some specific questions to ask about that, and Senator Scarr also has indicated he has questions on that. So we might return with audit and accounting when we get back. Ms Court, last word.
Well, Senator O'Neill, I do have some responses to your Netcraft questions, which I could deal with quickly before lunch
after lunch. And can I just put on notice, could you formally investigate what I've just put on the record, which will become very, very apparent as it's now 1:02. There are documents going up as we speak that go to the contractual obligations or the contractual arrangements with Mr Burrows, and also to the remediation orders from PwC International to the Australian entity that raise very serious concerns for me about the independence and the fit and proper test standards that are necessarily applied, and whether this particular incident is an opportunity for ASIC to formally work with the PCAOB, given there is an international dimension to this, to investigate what appropriate behaviour might look like, because we have a case study here about the Big Four, one in particular, but these franchise arrangements are in place, and my concerns are that the law of the land and the regulation that's required is a national responsibility, but in this instance it's very clear there was an international oversight that occurred and a failure to actually respond appropriately to our own regulator who was supervising PwC at the time, which is the Tax Practitioner Board. So take that on notice. I'll look forward to a response for the rest of the committee and myself as soon as possible on that particular matter. The committee stands suspended for lunch. It is now 1:03. We'll return at 2:05 for the last session. Thank you. So the committee will resume, and I'll go to you, Senator Scarr, for some questions straight up.
Thank you, Chair. If I could ask some questions in relation to the current status of the CHESS project. And I note there was a reference in the submission to the CHESS project, and there's also been some recent discussion about the status using the red, amber, green traffic light system with respect to the status of the CHESS project. So if the appropriate witness from ASIC could provide an update from ASIC's perspective.
Thank you, Mr. Longo.
Thank you, Senator Scarr. It's Joe Longo. I'll certainly give you our understanding of where a CHESS replacement is at the moment. I should start by saying it's all publicly available information, which I think is exactly where we want to be with ASX, though we made it very clear over time now that any issues with the current CHESS replacement program are transparently noted, and that information is released to the regulators and the market in real time to restore trust and confidence. So I will take a moment to answer your question, and if I've left anything out, I'm ably supported by Commissioner Constant and the Executive Director for Markets, Calissa Aldridge, both of whom are here today and have almost daily contact with this issue. So a formal decision was made by...
Before you sort of launch into that, can I just note from your opening statement that you talk in the second paragraph about taking short-term steps to enhance your monitoring. If you could provide a bit more information on that in particular, that would be helpful. Thank you.
Thank you. I'm
Mr.
certainly
Longo.
happy to do that. In fact, I might ask Calissa Aldridge to be ready to answer that aspect, as she's much closer to that. So a formal decision was made by the ASX Executive CHESS Replacement Strategic Guidance Group on Friday the 20th of September that the project status of CHESS replacement should be moved from green to amber. ASIC and the RBA had been receiving regular updates on the CHESS replacement project status, and we were given a heads up about a week prior to that formal decision that change was likely. And so as I opened, I think it was important that that started happening. So I was very, obviously not good news, but news that we needed to hear at the first opportunity. So following the decision by ASX to move the status to amber on 20 September, ASX communicated the status change to a range of key stakeholders through circulation of meeting materials to the ASX CHESS Replacement Technical Committee. And I won't go into more details other than to say that the meeting papers for those meetings were then published on the ASX's website on the 10th of October. So I think the first broad point to be made is we welcome that transparency and openness, both with us as the regulators, ASIC and the RBA, and with the various committees representing a range of key stakeholders. Now, Senator, I'll take a moment to just talk about the reasons for the change.
I'm very interested in that, including what we're to conclude from that change, but also noting that, you know, amber's amber, it's not red.
That's right.
And presumably in the life of such a complicated technical project, there are going to be moments when you lapse into amber.
Senator, you've anticipated one of the points I was going to make with respect. I think that's absolutely correct, and I'll come to that in a moment. But that is absolutely right. In technology programs of this size, nature, complexity and time frame, it's inevitable that there are going to be some bumps along the way. But I will comment in a moment on what our current understanding is of the impact of going to amber is on the overall delivery plan for stage one. The amber status is driven by two key risks that may result in a delay to planned dates for release one. While these are not yet confirmed, mitigants are still being worked through. It is ASX's view that they would not represent major delays. ASX wanted to change the project status early. The two key risks are product acceptance testing of release one has been delayed by a month due to some defects in the initial code drop and the configuration in ASX's environment. I have some other detail here, but I'll spare you. The second reason for the delay was a delay to the data platform build for CHESS replacement due to the move from Google Cloud Platform to AWS. There is a risk the move might take slightly longer than expected. It will not impact the commencement of the AMO build and test phase in February 2025, however, which is the critical go live for release 1. So it's too early to say whether this delay is going to lead to a more material delay. We'll just have to work that through, and as you can see from the detail of my remarks, which, as I said, Simone Constant or Calissa Aldridge will be able to add to, we're in constant engagement between us, RBA and ASX, about CHESS replacement progress. So the second point I would make, and I think this is the point you were making, Senator Scarr, it is critical that risks are actively identified by ASX, managed and tracked, and appropriately escalated. ASX must also keep the regulators informed of the emerging risks. So while the status change is disappointing, it is not unusual for there to be status changes through the life of a long and complex process, such as this one. So clearly the replacement of CHESS is ultimately the responsibility of ASX, but we really do want to continue to encourage ASX to identify early any issues that create risk for timely delivery to the regulators and stakeholders. There are other points that can be made about the different risk profile of this program with the one that it replaced, but I won't go into those right now. Now, Senator O'Neill, I think, asked for some details about our program enhancement. I might ask Calissa Aldridge to give us some more details about that. We've done some really interesting hiring the last few weeks and injected some new expertise into the team, and we've made some other changes as well. But I'll ask Calissa Aldridge to take the committee through those in more detail.
Ms Aldridge.
So Calissa Aldridge, Executive Director of Markets. Just before I kick off, just one point of clarification. The February 2025 date that the Chair had referred to is the current testing date for the Australian market operator release, and so that's the one which may end up being impacted by a month or two. That's still to be determined with ASX, rather than the go live date, which is still scheduled for 2026. So the range of our work program has changed a little bit. So we've enhanced our supervision model. As the Chair mentioned, we've got some additional capability on board, in particular looking at people with expertise with systems, large program change. One has come on board just recently. We've had another that we've seconded across from APRA some months ago. And we have some others that are coming on board too. So we're building out the capability we have within the team. We've
full-time appointments, and will they stay with you?
So the APRA secondee is time limited until next year. I think we've got one coming in permanently, one on contract, and that's a reflection of the current hiring conditions. But the intention is to maintain that capability, and not just for ASX. So we're looking across ASIC at other significant stakeholders that have significant platform changes and seeking to use those skills across the board.
And the person who fulfills that one full-time job that's embedded within ASIC, what qualifications and experience does such a person have?
So without naming anyone, I think about one of the people who've come on board has had the benefit.
One who's doing this then?
Yeah, so the intention is to build out the capability. We already had some people in the team who have got technology background and have been involved in the project, ASIC's project, throughout the CHESS replacement, but we're building out that capability.
Okay. So how many did you originally have, and how many now have you added?
So we had one who was a full-time FTE who did a significant portion of their time on this project, in addition to a few other things, including providing input on our cyber strategy and so forth. We now have, as I mentioned, somebody who's working full-time with us for the time being from APRA, who also looks at some other areas of our work, including cyber and AI and other things. And we've got a new starter who commenced about 2 weeks ago, who at the moment is working full-time on chest replacement and other ASX system changes, because it's not just the chest replacement that's on foot at the moment.
And what qualifications do these people have?
So these are all people who've got experience, so their core capability is different aspects of technology deployment. So some have had the benefit of being a supervisor and looking at technology and operational resilience of a whole range of different financial institutions in the context of APRA. Another one who'd worked with us for some time has worked in the industry for a very long time and had the benefit of running large-scale technology programs across some of the biggest data vendors globally. And another person who's come on board is quite senior experience, having acted as a CEO, been a CIO across software companies, I think in the bank, one of the banks as well.
So sort of the general IT, cyber backgrounds.
They do.
Are they qualifications that are required or experience that you're looking for, or a combination of both in those roles?
It's right. It's a combination of both, and also the benefit of having some of the that senior experience brings first-hand governance in terms of running those governance controls, being responsible for the governance committees, the reporting through to boards and other things. So first-hand experience of what has been delivered and what should be expected.
Okay, so
in
the last
addition
question
to on
is,
the ground.
when you get to full complement, how many will that be?
So I would say 3 on the technology side, plus an extra, which is the extra FTE is an extra supervisor, which is to supplement our existing team that does the supervision of all different elements of ASX.
Thank you. Thank you.
And that would be a
just
dedicated
return to where
person on
you were up to. Thanks for the help.
So in terms of so I talked a little bit about the supervision. So that's the uplifting and the broadening of the skills across the team. I just want to clarify too that we already had obviously a team of people who have been working on this program for quite some time, who've already got very deep understanding and experience with ASX and chess, and very much on the technical side of clearing and settlements facilities. So it's supplementing what I would say is already very excellent experience across the team. So some of the other things that we're doing, obviously you're aware of the steps we'd already taken with ASX around licence conditions, the expert reports, the infringement notice for one of the ASX matters that we had, in addition to the court case that is running, and the Clearing and Settlement Advisory Board that we'd established to help support the stakeholder engagement. We're in the process of consulting, or we've just finished consulting on the competition and clearing and settlement rules, which we hope to submit to the Minister by the end of the year, and they will address largely what we had in place for the regulatory expectations for competition and clearing, plus some additional obligations around governance and access and those sorts of things. And we're now that the passage with the FMI reforms have gone through Parliament, we're now thinking about how to use that new rule-making power to expand the range of expectations that we have with ASX. We're also working with RBA to rethink the way that we work together and coordinate, including to supplement how our skills across the two agencies can better complement one another. And so there's a range of work happening there. We've commenced work on the self-assessment under the PFMIs, so the Principles for Financial Market Infrastructure, which was one of the recommendations that had come through from this committee as well. So that work is also underway.
Okay, thank you. Senator Scarr.
Thank you. The granularity of that answer gives one a lot of confidence. So I appreciate that and agree with the Chair's comments about transparency. There was in the submission that was made by ASIC, there was a reference to, I'll just find it here. Paragraph 108. and I'll just quote for the benefit of Hansard, broadly these indicative insights, and this is in relation to the release 2 consultation, broadly these indicative insights include D, increasing support for implementing release 2 as a single release and cutover. However, there are concerns among some stakeholders. ASX has indicated it will bilaterally engage with these stakeholders to discuss the approach in more detail. Now, I would have thought that it's a positive they're having these discussions now in relation to these matters, and obviously there's a degree of transparency in relation to it, but keen to have some further detail with respect to the nature of that issue. If it could be explained in such terms that a simple Queensland senator could understand.
So,
Could I add that a simple accountable authority as well?
Ms. Aldridge.
this issue relates, you might recall for the CHESS Mark 1 replacement that there was a lot of discussion in the industry about whether it was appropriate to have a big bang, to have the system built in one go and then switched over on a weekend, and the risk that embedded within the program in case it didn't go well and there was no way to wind it back. What we have now with this.
So just to interrupt to provide further context. I am certainly aware of that, which is why when I was reading the submission, I was drawn to those words. So happy to explore, is that what we're talking about here, or is it something else, just to get a better appreciation of the issue?
Thank you, Senator. It's a similar issue, but the scoping for this version of CHESS replacements is a little bit different. So they've already broken it into 2 releases. So they've separated the first part, which the clearing side of it, from the settlement and the sub-register. So that you already have that separation. So release 1 is the first part of it, due to be implemented by around about mid-2026, and then the settlement and the sub-register would occur in that second release. And the discussion that ASX has been having with the industry is around the challenges of and the practical steps that you would need to go through to manage that transition in smaller steps, or the ability to actually wind back, and to discuss with industry the opportunity to have that as the release 2 as a single release. Noting already that it's been de-risked already by having had that separation from the clearing component.
Okay, so there's this concept of ASX has indicated it will bilaterally engage with these stakeholders to discuss the approach in more detail. Is there any significance in that discussion occurring on a bilateral basis as opposed to using one of the governance forums that have been, or committees that have been established, so everyone's aware of the discussion and the relevant issues?
That's a good question. So I think the way that it will play out in practice, or I know that it will play out in this way in practice, because there will continue to be discussion through the various committees, both the Business Committee and the Technical Committee, as well as the Clearing and Settlement Advisory Committee that we'd established or recommended that ASX establish. So there will be discussion in those multilateral groups. The purpose of having those bilateral discussions is to go into greater depth to better understand the issues that are being raised by the respondents and trying to work through those issues and look at a range of contingencies.
Okay, and final question. Oh, sorry, Chair, I'm just getting a bit of feedback, which is an echo, which is throwing me a little, but I'll persevere.
Have a look at that now.
Excellent.
Is that any better?
I'll see. Yep, that's perfect.
Wonderful, thank you. Ticks for broadcasting, off you go. Senator Scarr.
So my last question in relation to CHESS is in relation to how the governance structure is now working. So there were very dedicated efforts, and I think I commend those efforts in terms of driving a governance structure which is appropriate, has the relevant independence, has the relevant committee structure, the independent assurance program, from ASIC's perspective, is that all working as intended? Are there any teething issues? Any enhancements, additional enhancements required? From my perspective, the transparency indicated in the submission from ASIC indicates that we're in a far different position to what we were in a number of years ago. But interested in any general observations.
I'll give one general observation, Senator, then I will ask Simone or Calissa to supplement it. ASX has reviewed and updated its CHESS replacement assurance program, and the assurance program reviews will cover 6 streams. And what's different about this is that this has been put in place now rather than later. And so we'll be monitoring its development over time. As far as the overall governance structure is concerned, it is relatively stable. I don't think it's changed much from the last hearing. The Clearing and Settlement Advisory Group, I think it'll be reviewing its terms of reference. It's been in operation now for about 15 or so months, just on a year. And you'll recall, Senator, that we sort of encouraged the creation of that group to really satisfy ourselves that the concerns of market participants were being heard and understood at the most senior level between the ASX group and market participants. And that of course, is the group that's been, I think it's fair to say, very successfully chaired by Alan Cameron. Now, that group's focus is now going to change a little, so you can expect that group to continue, but it's the scope of its review or interest may very well grow. That's a discussion that will be ongoing, I think, between the group and ASX, and of course ASIC and RBA will have its say along the way. The only other thing I'd say about ASX's governance, and I will hand over, is that you will have noticed there's a new chair at the ASX, David Clark. His role as chair was confirmed last Monday, if my memory serves me, as was the appointment of Wayne Byers as a new non-executive director. So I don't know whether Simone or Calissa wanted to supplement any of that.
Senator Scarr, it's Simone Constant speaking. I can be really brief. I think the chair has covered it pretty comprehensively, but you did ask, do we perceive any teething problems? So I just wanted to make sure that I also gave my answer to that. No, at this point in time, as we move into this new phase, there's no teething problems to signal. I think as you've identified and the chair has detailed, the assurance program is very broad, which is appropriate for a program like this, and it does include the program itself. There is the benefit of the independent expert, and of course the independent expert's next report is due at the very end of this year. So at that point in time, we'll have new information, and there may be something to update you on at the next committee, but nothing to flag at this time. The adjustments to the governance group that the chair was just calling out are not reflective of teething problems. They're actually just reflective of continuing to adapt the strengthened governance we've got to match into the phase of this important program that we're up to.
Thank you.
Okay, excellent.
I might share
Thanks,
the call
Chair.
if it's all right with you now, Senator Scarr, unless you had a final one.
No, that's all I had on CHESS, so very suitable time to share the call, Chair.
Wonderful. Can I ask one question on this matter before we jump off it? The establishment of the new governance board that changed the way in which the sector was interacting with the ASX. How effectively is that operating in your view?
It's actually an advisory group chaired by Alan Cameron. It was created just over a year ago, I think it's fair to say, on ASIC's initiation.
Yes.
And there's already quite an elaborate governance structure. There's a business committee, and what's the other committee called?
A technical committee.
And a technical committee.
Yes.
Within the ASX group.
We took a lot of evidence on that, and people felt it was a broadcast
and in fairness
rather than
to those
an interactive model.
Committees and groups, they did a lot of good work.
Yeah.
But what we all, I think, picked up on was that there was still a bit noisy out there. There seemed to be quite a lot of strategic disquiet about what was ASX really going to do now to replace CHESS? And so the idea of having this very senior advisory group independently chaired by someone who turned out to be Alan Cameron, who's very well known, extremely experienced, very well known to the markets. It was to fill that sort of confidence gap that the market views and voices were being properly heard by ASX. So I think that's the way it's an advisory group.
I understand what it is and how it was and why it was constituted, etc. The question is it effectively doing its job?
I think it is. Yeah, I think ASX has welcomed. We're at every meeting as observers. The ASX is there. Sorry, ASIC is there. Reserve Bank is there. It's very transparent. The group meets regularly, and some of it, and it also meets. I have to say in camera, without the regulators present. So the chair is very, very careful, because I'm in regular contact with him as well for this very reason, to make sure it is effective. So I am satisfied that the chair is doing all the sensible things to make absolutely sure that market participants' voices are being heard, and I think that's been beneficial for the whole process. And I don't know whether Simone or Cliss want to add to that, but my short answer is yes, it's been effective.
And there is a declared set of in-camera meetings without the regulators present, as well as the ones where you get to observe. Is that correct?
Well, the way it works is every time there's a meeting, there's everyone's in the room, and then the chair, Alan Cameron, will then set aside time for just for those members of the advisory group to be able to speak with one another without anyone else around.
Okay. All right.
That's my understanding of how it works. Is that correct? Yeah.
Okay, thank you very much. I'm going to share the call now to Senator Pratt, who I understand has some questions on the CSLR.
Thank you very much. I've also got some questions on financial abuse, and I might just go to those quickly first. You made an excellent submission to our inquiry on this topic, which is due to report in December, and I'm trying to get my head around some of the way that those issues have developed in order to work through them before we report. So like Senator Scarr, I've got quite a lot of feedback of my own voice while speaking.
That's just been noted by broadcasting. They're making an adjustment. Can you tell me now, Senator Scarr, you want to try again?
Can you hear me?
Yes, we can hear you. And have you lost your feedback problem?
That's great. Yes,
ahead.
I have lost the feedback, so that's wonderful.
Thank you.
Thank you. So your submission highlighted that financial abuse is not a harm or form of misconduct that you have authority for within the financial services regulatory framework. However, that you do have, you do attempt to use your powers in the context of how you set expectations about how financial firms should treat vulnerable customers, and that there are obligations that apply to licenses that are relevant to that. I guess I am keen to understand what you identify and have the capacity to identify in terms of financial abuse, and where your powers in this regard should be headed in the future. Now, I understand that, of course, that's a matter for government to decide whether or not you should have further powers. But if such a recommendation were to come forward, for example, from our committee, and of course we haven't deliberated on that yet, I guess I would want to know what roadblocks you might foresee in that regard.
It's Alan Kirkland, Senator. It's an interesting question, and I think quite a complex one. And just to, I guess, go back to some elements of your introduction to that question, it is correct that there are no specific provisions in the legislation that we administer that refer to financial abuse. But as we noted in the submission and in our appearance at the inquiry, we do in fact pick up on issues of financial abuse, and I guess what we particularly tended to pick up on issues involving people experiencing domestic or family violence in some of the work that we've done, but obviously there's a significant overlap between people in that situation and people experiencing financial abuse. I guess to the extent that I can answer your question, because as you acknowledge, these are really complex policy issues that are ultimately for the government, I think that where we are best able to enforce obligations, it's where it's really clear who they apply to, so what sorts of entities they apply to and in what contexts, and that they are really clear obligations, so that it's easy for us, if we're going in and doing a surveillance project, to gather data on the processes of the institutions that we're looking at and the numbers of people that have passed through the process in a particular way or in another way, in order to identify whether there might be some sort of failure to comply with an obligation, which might then cause us to gather further information. So I think the greater the specificity sometimes of those obligations, the better, particularly in an area like this.
Yeah, I very much agree, and there's certainly been some discussion around, for example, what would need to change in the context of the Privacy Act to address some of these issues. I've noted that government has, across ASIC's website and AG's website, a fairly broad and generic definition of what financial abuse is. It does cover it, but that there's not really any technical stuff that sits behind that really demonstrates how, we've seen in the course of the inquiry, different financial products can be weaponised by perpetrators to the detriment, as part of coercive control. And so I guess I'm trying to work through, well, if clear obligations were to come to the fore, where's the limit of clear obligations, but also greater visibility of this kind of conduct and discussion of it by financial and other institutions?
I would acknowledge, Senator Pratt, that visibility is a real challenge in this space, because even where, I guess, financial abuse is, in a sense, being perpetrated using a financial product, that won't necessarily be visible or easily detected by the institutions involved. It might only come to light if perhaps the customer that's the victim of that behaviour is speaking to a customer contact line and happens to reveal some information that makes that clear to the institution. So I think that visibility is a challenge, but we've also recognised in our submission, and I think it also when we appeared at the inquiry, that to the extent there may be challenges under privacy law in terms of institutions feeling that they can capture that information so that they can draw upon it in future engagements with those customers, that we would support any work across government to really clarify the application of the Privacy Act in this area, because it is our general position across the issues that we look at that we do expect institutions to be recognising when customers are in situations of vulnerability, including financial abuse, and responding and tailoring their services and interactions appropriately.
And in the context of considering whether there might be a specific purpose within your Act, so clearly if you govern commercial conduct between businesses and from businesses to consumers, but here we're really talking about particular financial or other products being weaponised between consumers. Now, you could highly regulate that. You could have a light touch on it. You could kind of do it the way it's currently being done, which is to try and bring it through the fore through licensing arrangements, etc. But what should it look like, given we really do need to deepen and prioritise that connection between the very high levels of violence, family and domestic violence, and its correlation with financial abuse?
I don't feel that I'm in a position to answer that question really directly, Senator Pratt. But I would say that, I guess like the committee, we are very much in a phase of listening on these issues. So we've been watching what's happening before the inquiry very carefully and very closely. We've been meeting with stakeholders and building these issues into our conversations. So we recently met with Catherine Fitzpatrick from Flexibility Ventures, who I know was a prominent witness in the inquiry, and we're expecting to discuss some of these issues in some depth with our Consumer Consultative Panel next month, or later this month, in fact. I think that in many ways those bigger questions around whether there should be legislative reform, and if so, what it looks like, are very much questions for Treasury that will no doubt be informed by the work of the committee's inquiry on this issue. But we're also drawing upon that evidence, and to the extent that Treasury asks for our views, I think that evidence will be very helpful.
Thank you, Commissioner Kirkland. Finally, I want to ask, in the context of these issues, what the picture looks like in the context of directors' duties. We've seen significant evidence around people being signed up to being directors without knowing their obligations, and that in some cases they had a co-director as their spouse, or in some cases their spouse was a shadow director who had no intention of meeting their director's duties obligations, but of course leave the liability for that with their spouse. What kind of evidence does ASIC have about that, and how do you go about collecting it, or is it something that needs to be collected and have more oversight of?
Senator Pratt, it's Kate O'Rourke here. I might take this question. So thank you for highlighting this issue around the circumstances in which people are either coerced into directorship, are appointed to be a director without their knowledge, or are voluntarily directors, but then with the changing relationship between them and others are no longer willing to be a director and indeed suffer harm or abuse by virtue of that status. This is an issue that we have seen evidence or have had reported to us. I think in response to your particular question, is it sort of systematic collection of evidence? It's not, but it is nonetheless an issue that we are aware of. The circumstances in which we've become aware of it has included a new advisory group we've got in relation to the business registers. So it's the Registry Business Advisory Group, which includes on it representatives from people who help those who find themselves in the circumstances that I described as coerced or unwitting or no longer willing to remain directors. And some of the real harm that, has become apparent through the representations that we've heard from those participants. So it's of concern to us. In some ways, it's a concern that we need to understand better about possible responses. But there are some things on foot at the moment which we are seeing as mechanisms which can in part assist, but not in full. So, for example, the work that we're doing to link the director IDs that people are issued to companies for whom they're a director, at the moment there isn't a link between director IDs and companies. We are working with the ATO as part of the Registry Connect program and under with the support of Treasury, because legislative change is needed. But in that planning and design and investigative work, we've identified that steps that would allow verification of a director's ID before it's attached to a company would include being in touch with the director in a way that doesn't happen now. So at the moment, when people are allocated or nominated or referred to being directors of a company, that can happen, like I said, almost unwittingly. And so this system of using the director ID is a mechanism that can assist on that front. But just to reiterate it, that's only one of a number of fronts that are of concern to us.
Yes, and I think something like that could also make a contribution to one of the things that I hope the committee will consider, which would be moving the child support agency to inside the ATO. So it would be good to see that kind of greater connectivity. In terms of directors...
I can follow.
Yeah.
think Senator...
Sorry, that I
Do you want to
was
state
just
that
making
again,
an
Senator Pratt?
observation, and I'll try and make. I guess I was just making the observation that that kind of reform would integrate well with suggestions that we might look at in the course of our inquiry, which could, for example, include moving the child support agency into the ATOs.
Thank you.
So my next question in that context is to consider it in the context of directors' duties and whether this kind of conduct is seen to qualify as a breach of directors' duties or not, and if not, why not?
Sure. So I think it would be case specific, but the primary or sort of a preliminary observation I'd make is that the director's duties are ones that are owed to the shareholders of the company and to the company as a whole, rather than them being specific duties, for example, to other directors or to people who have a relationship with the director other than shareholders. So it's not on its face necessarily something that would disqualify someone or found a breach of directors' duties, but I think, like I said at the beginning, it might be case specific.
Can I ask a question there? Where does the fit and proper person test fit in with regard to directors' duties then? No interaction.
Directors' duties are Corporations Act provisions as to that don't include a fit and proper purpose test.
Anybody can be a director.
And that allows a lot of productivity and easy access for people to set up a business and get going. But what we are seeing is a proliferation of new arrangements that is involving people setting up companies through trusts, and we are seeing a burgeoning field of abuse in that space. And there is some expectation, I think, in the community that a person who has the status of a director has obligations that are social in nature as well, that are tied to freedom to take up the opportunity of being a director if you are a fit and proper person. Is there some work that we need to do in that space around eligibility for directorships or scrutiny of directorships that would crimp the capacity of exploitation when it becomes known to any entity, whether that's the police or a financial institution or a reporting entity to which information is provided? Like, we can't just turn a blind eye to what's going on in something that we are now getting as a matter of public record is an emerging increased product threat to the safety of women, both economically and physically.
I was just going to, sorry, Sarah Court, for the record, I was just going to say, Senator, I think in the context of financial abuse, coercion, manipulation, the issue actually manifests in a different way to that which you're articulating. I think what we are hearing about increasingly is circumstances where victims of domestic abuse have been registered or listed as directors either under coercion or without their consent, and indeed many of the examples that we hear about, the person has no understanding or has not been informed that they have been listed as a director of the company at all. So that's certainly anecdotally is increasingly being brought to our attention, that effectively the corporate form is being used to exert coercion, control, and then when the company or the entity gets itself into trouble, it becomes insolvent, it's got, creditors beating down the door, that the one person left standing.
They were a director is left holding the bag.
Indeed,
Absolutely,
is someone that yes, does not have any understanding or has not consented to be a director. So certainly we are talking about this issue internally a lot more. We do have the director ID issues that Commissioner O'Rourke's talked about that may assist to solve some of that. It may not, of course, but I think that's, rather than that fit and proper test of directors, I think perhaps the more significant issue we need to grapple with is these people that are, listed without their knowledge or consent, and who are then left in what can be a very dire situation that they weren't aware of.
And I think picking up on that, I think if the focus were instead on the perpetrator and whether or not they are a director and have they met a fit and proper test, which is, I think, the question you were putting to us, would that assist? There's plenty of circumstances that we see where someone who is not a director, either they're a shadow director or they're somehow other associated with companies but not having taken on that role, can still undertake these actions of concern, whether it be nominating someone else or otherwise acting in a way that's abusive. So it may not, trying to fix that category may not prevent as effectively as we might all collectively like. Anyway, that's just an observation.
Thank you. Senator Pratt, last question. Senator Pratt, did you want the call again, or?
Sorry, I was talking. Yes, no, I was talking, but still on mute. I want to unpack that and find out to what extent the Corporations Act itself might be setting this up. So, for example, if you're a director of a company but not a shareholder, then your obligation is still to the shareholder who may be the perpetrator of the abuse. And I'm trying to unpack the extent to which the corporations law itself can therefore facilitate such abuse.
So I think in referring, sorry, forgive me, Kate O'Rourke, in referring to the Corporations Act provisions for directors' duties and summarising them as the director's duties, to whom the director's duties are owed, the shareholder and the company as a whole, it's not to individual shareholders. The point that I was trying to make was that it's not to other directors nor to particular people. So it's the provisions with respect to how directors must behave and to whom they owe duties. That's what I was describing there, to whom they're directed.
Yes, I understand that. I'm just trying to work out the extent to which that arrangement can facilitate family and domestic violence and financial abuse, because there's no obligation to the director in the context of preventing family and domestic violence in pursuing their duties against them. So I haven't expressed that particularly well, but I think you understand the connection I'm making.
No, and I do understand, and I think it is a feature of this part of the Corporations Act. Obviously varies a lot as to how specific or general some of the provisions are. These set of provisions are cast generally and encompass expectations with respect to directors that across quite a wide range of activities, and a lot of the sort of specifics of that end up being filled out by our case law, when judges particularly consider their application.
Yes.
So yes, you're right that they're not enumerated in the Act to have particular obligations, including such as you've described, but they do have the capacity to be adapted over time to in circumstances that are, like I said, a judicial consideration of whether someone has acted with care and diligence, someone has acted in good faith, that they have not misused their position, they have not misused the information that they've received by virtue of being a director. So I think we've considered in the past whether additional directors' duties should be introduced for very specific or quite specific circumstances, and have come back to there being a degree of breadth and flexibility associated with the current framework. But I can understand why it's a question that you're keen to understand how they apply.
I guess if there's a degree of flexibility with the current framework, it would seem pretty unlikely that within that framework a woman experiencing coercion and financial abuse accompanied with domestic violence would be able to pursue something in a court, or using some of the precedents that would get her from out from underneath that So what work could we do or document in terms of precedent to point to really demonstrating that victims who are victims of coercion and financial abuse because they are a director in inappropriate circumstances can actually have some real recourse, because I've seen very little.
Yeah, thank you. I don't have any specific cases to draw to your attention.
I think that was the last question there,
Thank you.
Senator Pratt.
Thank you. That was a really helpful discussion.
Thank you very much. I'm going to go now to some questions on audit, if I can. Can I just go to report 799 on the Oversight of Financial Reporting and Audit 23-24, and just observe that it doesn't seem to identify the audit review results for each of the largest 6 firms.
Yes, so thank you, Senator O'Neill. I'm happy to answer questions in relation to the report. What we've done in this report is both looked backward over the year that's been and looked forward over the year that we're in currently now, and to describe the range of activities that ASIC has taken with respect to audit. Is that a little bit better? Sorry, is that better?
Yes.
No, you can't hear me very clearly?
Not as clearly as I'd like, no.
No,
Turn it up a little.
So,
go on.
Just to repeat, that is better. Yeah, thank you. You're right to identify that this does not name outcomes attached to firms, and that's consistent with the report that we provided last year as well, where what we've done is described thematically the issues that we've seen both across financial reporting and audit at the thematic level, rather than connecting these to particular reviews or the firms. So just to remind, just to reiterate that we don't have any actions or regulatory hooks at the firm level or responsibilities with respect to firms. That's the gap that we referred to earlier. What we've done is described in this report the risk-based methodology that we've used to identify the financial reports that we review, and then based on those, using that as the foundation, and with some additional items as well, the audit reviews that we do, and then, like I said, to report those on a thematic basis.
So can I indicate once again that given what we've seen in audit over the course of the time that I've been on this committee, its fundamental importance to the proper functioning of the markets, that I think it's a widely held view within the committee that while thematics are actually very helpful, it is not sufficient, and that we actually do need insights into the particular providers of the audit companies, especially the big 6, because there seems to be very different cultural practices and business practices within them. We don't find them all the same at all, and we remain concerned that there is no peekaboo view going on in terms of random audit at a sufficient level to give the committee confidence that people are mindful that there will be observation and it will be randomised.
So thank you. That goes to, I think your observation particularly goes to the work we do on audit file reviews. Can I draw to your attention in the report a description of the surveillance program that I noted earlier just before the lunch, that is focused on conflicts of interest and independence. So if I take you to page 18 of the report, on that second column, it describes the auditor compliance with independence and conflicts of interest requirements. So you'll see that this involves us doing data matching across all 3,000 registered auditors, and that we have written to all of them on Wednesday indicating about our data matching surveillance program in relation to those 3 statutory provisions that I referred to earlier, namely the relationship between audit and non-audit fees, tenure of auditors, and the relationship in terms of the person between the auditor and the company being audited. So what this is a wide-scale review of some specific requirements. It complements the work that we're going to continue to do in terms of financial reporting and audit file review surveillances, which your comments attached to earlier. It also complements other aspects of our surveillance and financial reporting and audit program, which we've set out in this summary on this page, because there are a number of different components. We too think this is very important work. We've increased both the number of people and also the streams of work associated with financial reporting and audit, and look forward to sharing with the committee the outcome of those new activities in due course.
Thank you. I'm just trying to recall where I read in the last 24 hours a statement of a reduction in the number of people in that sector. I think it was 26 to 28, and then it went down to 20. Is that in the
number of people in
audit observation? Might be.
Do you mean the number of firms being audited, or the number of?
I'll find it and put it on notice.
Oh, thank you. Yeah. No.
Find it and put it on notice if I can.
We also, as well as the report, just to bring to your attention that those letters that we wrote to each of the auditors, registered auditors, we also wrote to each of the CEOs of the big 6 firms. While we do not have regulatory hooks with respect to the firms, like we've mentioned today, we do recognise that to the extent auditors have these responsibilities to manage conflicts and independence obligations, they often do so through controls and mechanisms at the firm level. So it's really important for the firms to be aware of our concerns and our areas of inquiry, so that they are aware of, the extent to which the members of those firms who are auditors are relying on or will be referring to firm level governance, risk management, other controls to make sure that they're in compliance with these important requirements.
Given that in the current partnership structure as it exists, all partners are jointly and severally liable, you'd think that there would be a high level of interest, much higher than I think what we've seen in certain circumstances. Could I take you to page 3 in ASIC's Oversight of Financial Reporting Audit, and its outcome of entities adjusting $1.886 million in the surveillance period. How does this reflect on the state of audit industry in Australia?
So that outcome is with respect to our financial reporting surveillance rather than the audit surveillance. So so there's 2 parts of the program. Yep. We have people who read all of the, or not all of them, a sample of financial reports. So predominantly listed companies' financial statements. But also we use a sampling of others as well. So it was in relation to the financial reporting surveillances that those restatements occurred. And so if I take you to the section of the report on financial reporting surveillance, which starts on page 7, that is the section which describes some of the circumstances of concern that we identified through reading the financial reports. So there's some descriptive in the operating and financial review. There are quite a wide range of areas of concern: impairment and asset values, non-IFRS profit information, the financial reporting disclosures, including prior year comparatives, etc., revenue recognition, share-based payments, group accounting, tax accounting, and lease accounting. So they are some of the areas that we were concerned about. And we've got also in our report, I think, a list of some of the companies that were affected by that. So if I take you to page 4, the key outcomes for the surveillance period, that some of the particular areas of concern or companies who we had restate or who chose to restate their financial results after our concerns, they're listed there.
And you're referring there to the media releases which indicate, is that the case?
Yeah, sorry, those. So yeah, that's how we've linked.
Cotton and Fluids Corporation was one of the entities that
restated.
Had to restate.
Mm-hmm.
Shine Justice, Link Group,
mm-hmm.
Data Hash 3,
yep, so
Southern Steel Group, LPI Australia, and Energy World Corporation.
So just to clarify that 2 of those weren't necessarily restatements. They may have also. So I just wanted to clarify that Data 3 was changing accounting policy, and that final one, Energy World, was from issuing a reduced content prospectus. So they had concerns Whether they also restated, we can clarify, but certainly the other ones that you read out, they resulted in a restatement, and some of them were very significant. As you can see, 1.8 billion is a big restatement in total.
Now, you indicated that you contacted 39 entities, is that correct, in the surveillance period? On page 7, and raised 61 issues?
That sounds correct, yes.
Okay, how many listed entities are there?
So if I can take you to the back of the report, we set out our methodology, including that question in a little bit more detail. So if I take you to page 27 of the report, population and our coverage, that gives you that data about the number of companies who prepare and lodge financial reports, the number of listed companies.
How many?
So the listed companies is there in paragraph 22. Paragraph 2. The total number of ASIC's listed entities during the year was approximately 2,300.
Okay, so of 2,300, there were 39 that were contacted.
Sorry, can I just take you to the top of the next, the column on that page, on the second column? So there were 188 financial reports reviewed.
Which page are you on now?
Oh, sorry, 27.
Yeah, back on 27, yep.
Column 2, second, the right-hand column. So that
29,000 entities are required to lodge a financial report.
Sorry, the second column, at the top of the second column, it notes that 188 financial reports were reviewed.
Okay, which commenced surveillances on 39 entities and covered
61 issues, yes.
61 issues. Right, and I'm trying to understand what this 188 million, was it? Let me just...
There's 1.8 billion, I think, is the number.
Yeah. 1.886 million. Is that correct?
Billion.
It's a billion.
For the restatement, yeah. So if we
1,886 million.
Yeah.
So we're talking more than a billion, nearly $2 billion.
Correct.
Okay. So that 2 billion restatement is for how many entities?
So 25 entities made adjustments to previously released financial information. So I'm back on page 27, yes. Second column.
Yes.
It says that we commenced surveillance on 39 entities covering 61 issues. From the 39 surveillances, 25 entities made adjustments.
Okay. So for people who are not, like me, I'll just call myself a normal, reasonably literate financial person now after the years on this committee, but with no formal qualifications. Just trying to figure out what scale of a problem we have here and how much money might not be being correctly put forth in the financial documents that you have that have to be advanced, right? So 29,000 entities have to lodge a financial report with ASIC.
Mm-hmm.
The total number of ASX listed entities during the year is 2,300.
Mm-hmm.
With all of that, in that context, you had a really good focus on 188 financial reports out of those 29,000 entities and the 2,300 on the ASX. So that's like a small number. It's a sample. It's not. Yeah. It's not widespread.
Yeah. Just to clarify that, 29,000 includes the listeds, so they're not additional to.
Right.
Yeah,
so they're embedded in that.
Yeah.
So there's 2,300 of those are listed.
Yeah.
And 29,000 in total. And you looked at 188 financial reports.
Yes.
Amongst those, from the 39 that you looked at, 25 of those 39 had to make adjustments. That's correct.
That's right.
Now, if that was a positive figure, 25 out of the 39 got it right, that probably wouldn't be so concerning. But 25 out of the 39 had to make adjustments. And the number that we've got, the nearly 2 billion, that is the adjustments that you forced by this.
That's right. So
observation.
I believe of those 25 entities that did make adjustments, it was 4 that made up the bulk of that 1.9.
Still a lot of money, though. Whether how it was distributed is of interest, but we're talking about $2 billion that wasn't reported accurately.
That's right. So we risk rate to identify those financial
And
reports.
we've had that discussion, but I just want to get this concept clear in my mind. What's the percentage, 25 out of 39?
So the 25 is a subset of the 188 that were reviewed. So we we surveyed the 188 financial reports, and they themselves were risk rated to identify. So just to go from, I think implicit in your question might be, is that 188 random? And the answer is no, they're risk-based identification of those reports to review. And of the 188 reviewed, 25 made adjustments. The fact that there was a surveillance step in the middle, I think, is important, but I think the better denominator is the 188.
188. Okay, all right, so that gives me a very different percentage figure. And for that 25 out of 188, the quantum of adjustment that was required to meet what they should have got right the first time was $2 billion.
Yes, like I said, it almost $2 billion, and my understanding is that was by no means evenly distributed. We had 4 entities that had very substantial restatements, and I'd be happy to give you this additional information to help understand the scale of the adjustments and the range of them.
Okay.
I think it's
the next
relevant.
question for me is, which entities that were involved with the financial reporting were responsible for those 25 corrections?
So we've included through attaching the media releases the significant ones. So they were the ones that you were reading earlier that were at the beginning of the report.
Which companies that were doing the financial reporting
Yeah.
are related to each one of those?
Do you mean audit? So the financial reports are the responsibility of the directors of that company.
Yes.
So they need to, they're the ones accountable for any misstatements and
And were any of them
restatements.
provided with them independent of any audit, or were they all audited
all
before?
All of the
So-
financial reports, and that indeed is the basis of us having joined the financial reporting and audit surveillance programs, is this understanding that I think you're mentioning,
So
is that
there's auditing companies involved with these reportings. So who are the auditing companies that were involved in the 25 out of the 100?
I'd have to take that on notice. We haven't included it here, and I don't have that information immediately.
And for me, if I were in business and setting up a company that I wanted to be fully transparent and operate at the highest levels, I'd want to know who's doing a good job and who's not doing a good job in terms of financial reporting and auditing.
So the financial reporting, it's that person who's setting up the company who'll be responsible
but they've
for
got to
their
get it
own-
audited and
That's
they've got to
right.
put it out. They're responsible for that. But the
Yes.
auditor is supposed to check it off. Now, if the auditor caught what needed to be caught, there wouldn't be $2 billion that had to be restated, would there?
So I think that, yes, I think you could draw to, if I draw to your attention on the bottom of page 3, that diagrammatic, which does show that we have attempted to identify those areas where there are concerns with the financial reports, where there are also concerns with the audit files that we've identified. So if you can see that, there's 3 in that overlapping area. There's 22 financial reporting findings in that pale blue one, which were separate. So the Venn diagram was an attempt to acknowledge both the connection, but that some of the financial reports we then did not see a concern, or to the extent it was one of the ones reviewed, there wasn't an audit problem as well as a financial statement
So do you
problem.
think that this indicates that the sector's in good shape, or are there big problems here?
How we've phrased the report is to identify some really important takeaways for the...
That's not my question, Ms O'Rourke.
Well, my answer is that in expressing our key expectations and our concerns, as well as our findings, see room for improvement.
That's a very nice, kind teacher's report. My question is a bit more pointed than that. Are there problems in this sector? Do you believe there are systemic issues and or problematic practices in the audit industry such that required this sample, risk-weighted as you've described it, indicates that $2 billion had to be restated?
So I think that you can see from the way that we have continued to continue enduring aspects of our program to change them to try and connect between financial reporting and audit and to supplement them with new work streams, both ones last year and this year, is indicative of ASIC being concerned about issues with respect to both financial reporting and audit, and determined to use a wide range of regulatory tools to enhance outcomes, given the importance of both financial reporting and audit for our capital markets and for our economy.
Right, so there's a lot of words there, but you mentioned conflict of interest as an area of concern. How many of these failures that required a restatement involved conflict of interest?
So the restatements are concerns with the financial reports, and the preparation of financial reports is not an area where we've examined conflicts, because that's the directors of the company, or it rests with the board indeed, and then the subcommittee and those preparing financial reports within a company to get that right. The conflicts work that I referred to earlier and that we're really focusing on is around on the audit side. So I just want to make sure that the restatement issue that you've identified as being of particular note in this report is a financial reporting restatement issue.
If conflicts of interest in all of our inquiries operating between multiple entities, between directors of companies and the people who are providing the audit, with the auditors providing other services into those companies, like the enmeshment that's part of this sector seems to be a problem that we observe all too often. So I'm interested that you're concerned about conflict of interest, but in one particular area, and I'm glad that there is interest, because I'm very concerned about conflict of interest in audit.
No, thank you. When I say each year we've been evolving our program in relation to which regulatory tools and activities we can take, what I take from your observation, and I think is a good idea for us to take back, is making sure that we connect, like if we've got this new work on conflicts and like I said, the statutory provisions that they go to, connecting any findings that we have there to the work that we do in our financial reporting, including restatement work. So
absolutely.
Yes, thank you. I think I understand.
Of interest starts with the word mate, right? Nudge, nudge, and a little conversation goes on, and there's a little bit of fudging, and the fudging adds up over time. If nothing happens and people don't observe, businesses get established and practices continue, and we end up with having to have these material restatements. And we don't have any because there is no reporting. We don't have any idea of which companies are doing a good job and which companies are doing a bad job. And we did have that previously. We don't have it now. Can I ask how many of the contraventions identified in the report also constitute a violation of APES 110? And I'll come back to you, Mr. Yanko.
Sorry, could I ask you to repeat that?
How many of the contraventions identified in the report also constitute a violation of APES 110?
So the contraventions of, do you mean the restatements particularly, or the, maybe I can come at it this way. We looked at the AQSM1 as a voluntary exercise by which the preliminary, the first response assessment of those that the firms did, we collected for the 6 firms. So I'll just bring to your attention the summary of that work, because it's important. Bear with me. Yes, so it starts on page 16. I think that the short answer to your question is I'm not aware of there being a cross-checking of outcomes there with particular findings.
Professional requirements, yeah.
Or I took your question to be around those restatements, for example, or findings on audit file review.
So to make it simpler, I'm an auditor. I go in and somehow I haven't done my job correctly, whether it's a failure of professional integrity, it's a failure in competency, I've done something wrong, then it's identified. Then we figure out what it is that I did wrong. If there was a violation of APES 110, what happens? Is there any discernment at that level, or is it just, oh, there's a bit of a system problem here, the financial adjustment's done, we overlook the individuals who's made the mistake. That's not accounted for. They're not reported to their superiors. There's no accountability there. It's not the person who has made the mistake or the person supervising the person who's made the mistake. None of that is advised to CANS or... I'm talking about this whole ecosystem.
And the layering, and I think that's the observation that you're making is around the fact that there is the ASQM1 as something that we've had a look at. All the accounting bodies have observations with respect, or oversight with respect to, versus the individual statutory responsibilities and the gaps that occur both at the firm level and more generally, which I think is the subject of some of your inquiries.
Well, I just think somebody's... $2 billion is not a small amount of money. You know, when we're talking trillions, I suppose there's a relativity dimension to it. But $2 billion having to be restated in what you observed, which is a fraction of what is reported, is concerning to me. And it is enabled by people who seem to be able to show up and do the same thing year after year after year without any consequence to them personally. So I could be the worst auditor in the world. I just get picked up. There's a restatement. Okay, keep going.
And I think
it doesn't seem right. Mr. Longo.
I'm going to ask.
Yeah, I think
It's okay with you, Chair. I think Greg Yanko in a previous life did a lot of work on audit and financial reports before becoming interim CEO. So I think it might be helpful to the committee to hear from him about the historical experience working with these global firms and trying to get them to lift their standards in conducting audits. So I'll just pass to Greg.
So I think first...
We don't want to do too much history. Let's get to the moment in this report if we can, because we've been around for a while.
Okay, so you made a suggestion that we had this information before.
We did.
But we didn't really have good information because it was not statistically significant. We kept saying every year that do not read too much into these accounts. We did it more than 18 years in a row without really demonstrating that we're finding anything different. As soon as plus the issues we did find were usually not of much significance, mostly minor, and not identifying significant problems with the accounts and not leading to changes.
Why do I feel we're having this conversation again, Mr.
Well,
Yanko?
I'm just going to get to my point. So and as soon as we started looking at it differently, we started finding the sorts of issues that Commissioner O'Rourke was talking about. We started finding some indications where there were real problems that we could identify that needed to be looked at and addressed. Now, the further work we're going to do is to do a deeper dive into that. Now, the final point I'd like to make is the focus is on good financial reports, and the financial reporting surveillances are where we found, as you said, more than $2 billion, we found issues that needed to be addressed. And just the final point I'd like to make is I wouldn't extrapolate the number of 180 reviews with $2 billion found into 1,800 listed companies and X times billion because of the risk rating. So these are designed to find companies where we suspect there might be a problem.
And I think, Mr. Yanko, we've had this conversation before and we've indicated, yes, it's great that you do risk rating and we found these things, but we also are of the belief that there needs to be some of the PCAOB, peekaboo version going on as well. And it was helpful for the committee to actually have the big companies declare what they, what was observed when you went in and had a general look at them every year. And we were happy with the point that they actually got to a point where they were putting this out in public, because one of the things that they need to do is a degree of transparency, I think, for everybody. Could I go to page 7 of the report? ASIC's identified findings against firms reporting business risks as part of the operating financial review. This is materially important to retail investors so they can make informed decisions. What does ASIC see as the inherent risk to the financial sector of companies providing misleading or generic information in place of specific and valid information?
So I think the operating and financial reviews are a really important part of the financial reports because it helps explain in more narrative form what some of the numbers are speaking to. And that's why it has been an area of ongoing focus for us when we were doing our financial reporting review program, I think it's important to retail investors in response to your question, because it is sometimes difficult to navigate lots of different numbers, and an operating and financial review that crystallises the insights that can be drawn from those numbers can help retail investors understand the financial position of the company.
So this is where we get the truth about what's going on, which is critical for people who are managing their own superannuation fund. Like they don't have, you know, intimate relationships with research houses. They go to these critical documents, financial reports and audited financial reports, to make decisions about where they're investing their life savings. And we also have an increasing phenomenon of young people who are, you know, having difficulty attaining property, who are actually engaging in the market to try and grow their wealth in that way to be able to later get into the market. They are also relying on the transparency of proper financial reports. So do you have concerns about people running self-managed super funds and young investors being unable to rely on the accuracy of financial reports?
We recognise the importance of accurate and timely information and financial information in the market for all users of all of them, including those categories that you described.
Okay, and given how important that is, what sanctions have been taken against individuals who are responsible for the failures that you have observed?
So the report does cover both the review process, some of the review outcomes, including the enforcement outcomes that are described. I think when we were also earlier going through the lists in the annual reports with Senator Scarr, there was lists of outcomes with respect to auditors in there as well. So if I can draw to your attention, in the report we include on page 5, the enforcement, the outcomes start on page 4, which I think we've spoken about some of the restatements, and then on page 5, the OFR, so that's the operating and financial review that we were just describing, the importance of that. Those were the restatements, and then the enforcement actions that were included there. So like I noted earlier, there was reference in the table that Senator Scarr was taking us through to a higher number of outcomes for auditors. So, and I think the differential there is the work that we've done with respect to SMSF auditors.
Okay. You indicate enforcement action where auditors fail to comply with the law included some matters that were referred to the company auditors disciplinary board.
Yep.
Right. Is that the consequence? Is that the sort of...
So under the statutory framework at the moment, if we have concerns about a registered auditor, the disciplinary process is to take those concerns to the company auditors disciplinary board.
Yep. And we know that we had evidence from them and they were concerned about not getting referrals. So is this at the beginning of a flow of referrals, or is this consistent with previous year?
It varies, the number of cases that we're able to build a sufficient case to send to the company auditors disciplinary board. We are also constrained by under the provisions as they apply. You can't make reference to them publicly until the conclusion of those proceedings. So unlike most of the activity that ASIC takes in a disciplinary sense, where steps along the way, including commencing proceedings, is something that we can make public reference to, under the provisions of the CADB, we are, those proceedings are confidential until they reach their decision. So I can say generally that we have other matters that the CADB is considering now, and that we've got a pipeline of actions that we are working towards a CADB application.
Right. And from what companies are these auditors that are facing disciplinary action?
So if I take you to the particular examples, if Media Release 23252, that was a BDO audit partner that the company auditors disciplinary board found failed to meet minimum standards. So the Media Release 23262 was Mr. Spagnolo, who was a Director of Corporate Audit and Advisory Services Limited. The next one was not a CADB action, but was an outcome that we referred to, which was a penalty. Mr. Nicholas Benbow, who is the Director of William Buck Audit. And then the other one that we made reference to, so Media Release 24116, was Mr. Robert Johnson and audit firm Hardwicks.
Okay, so in each of those instances, this is none of the big four.
That's correct.
And so have you found any filings with any of the big four? Are there any investigations underway?
So like I mentioned before, in terms of information that we can share about actions with respect to the company auditor's disciplinary body,
it's limited.
We have restrictions. There are confidentiality restrictions that apply.
Okay. And we've encountered with this committee problems with, secrecy provisions between the ATO and the TPB. We dealt with that by making regulatory changes, or legislative changes, in fact. How are people able to see what's going on? Do changes need to be made so that people know who the individuals are who are doing the wrong thing and where they are located?
So I think you referred to that wider sense of whether the regulatory provisions need to be revisited, and I think both the Treasury issues paper that was issued earlier in the year and our engagement with that has provided a venue through which we can identify whether better transparency with respect to beginning proceedings would enhance the system.
Yeah. Earlier today, I think in the opening statement, Mr. Longo, you indicated, a shift from publicly listed capital to private capital. Without the requirements of public listing, private capital can be somewhat harder to observe. It's a place in which, the movement of money might be more hidden, less subject to scrutiny. How much observation, how much investigation of private equity is ASIC undertaking with regard to the observation of financial reporting and auditing of those financial reports?
We're in the midst of doing intense roundtable discussions and collecting data, and we'll be publishing a discussion paper later this month. So we're not at a stage where we'll be publishing too many conclusions. At this early stage, I might ask Commissioner Constant to speak on this topic. I wouldn't say audit or financial reporting issues lie at the heart of the dynamic we're seeing between private and public markets. Both markets benefit from
good reporting and
good reporting. That's exactly right. But I'll ask Commissioner Constant to comment on that.
So I think at the heart of your question was private markets, private capital and reporting and disclosure. Would that be correct?
Yes, that's fair.
Yeah, so just to add to the Chair's remarks, that's actually one of our key focus areas at the moment. We've been, in terms of our data gathering phase that we're in, the Chair has just mentioned the roundtables we've been running with industry, market, consumer experts to see if there is a sense of a gap as between public and private markets and information. Also, obviously, observing the work of our COFA colleagues, so some publication by the RBA, for example, and some discussion with APRA in the area. As the Chair has mentioned, there's no conclusions at the moment, but we are mindful of the differences in information in a listed company with continuous disclosure, for example, as opposed to the private market. What does that mean? And therefore, where there is growth in this investment, does that create a gap that's inappropriate? Because we're being very careful not to say one market is better than the other, or that there's necessarily a problem. But if there is that gap, does that create a problem? And do we need to think about who are the investors in these entities before we come to any conclusions? That information gathering space and what that transparency looks like is actually one of our number one focus areas right now.
Could I just ask how critical to is it more critical to the private equity market that the quality of audit is high than it is to publicly listed companies?
It's Simone Constant again for Hansard. It would be too early to say. There are a number of tools, regulatory guidance measures, roles of regulators, and of course roles of investors that come together here. So it would be too early to say that, and I think we need to both look at entity type and end investor, end consumer. And that's what we're trying to understand at the moment. And just to step back just really briefly, because I know you've got a particular area of focus, but there's 4 areas in our work plan at the moment. We're focused on 4 very different areas. One is the public markets and the health of those, and understanding what might be driving what might be either a structural or a cyclical flat spot in the market. So it may still be proved to be cyclical, for example, the rate cycle. We're looking to understand private markets and that growth in private capital that's happening globally and what is different in Australia. In that regard, we've spoken to a lot of people and we've gathered a lot of information and perspective so far. That does seem to be something more permanent. So we're trying to understand how Australia might be different to international, and noting that internationally there's a big focus on this as well. And also trying to understand the role of superannuation in Australia. You've talked about SMSFs. We also have aggregated sophisticated investors in terms of the large funds. So what does that mean? And then in the 2 other areas we've been focusing on, there is also the role of superannuation and what do disclosures look like there. But finally, private credit, the private credit space. So there's been a growth of private credit, which is just one dimension of this dynamic. Who are the end investors and what is the information they have? So it is too early to give a clear answer to that question. It is one of a number of factors we're considering when we think about who takes agency for the reporting and then who is the end investor.
So the end investor is always going to be in an asymmetrical relationship with those who are inside having the information. One of the critical ways in which they are going to discern the value of any product and determine their investments, their decision making, is if they have access to accurate information available in a timely way that they can rely on. And to make that happen, we have to have confidence in the audit, the quality of audit, which is the whole purpose of my questions here. You know, once upon a time we didn't have superannuation, but every Australian who works now has it. Every single one of us relies on the truth-telling about what's really going on inside companies, whether they're listed or not listed, to inform the decision-making, whether it's at a personal level as SMSF, industry, retail. We need some clarity and confidence that there's not material misstatement embedded in unknown quantities in the market, in the information. Like that's the problem.
It's worth noting the increase in information now available by virtue of the requirement for the registrable superannuation entities to file and lodge their financial reports, audited financial reports with ASIC, which started from 1 July 23. So those reports, this is our first year.
Part of the information that's available.
And it's part of our program, so that's in the forward-looking piece.
Check it.
Yeah, that's right.
Okay, and we'll find out if any of that has been misrepresented or not properly audited as well, which will provide very interesting things. ASICs refer to restarting the inspection of previously grandfathered private companies, partly on the grounds that they're very large and important to the Australian economy, so aligned with what we've just been discussing. What would constitute a firm being important to the Australian economy?
I think the reference in that paragraph is to the size of these particular companies, rather than. Was your question which sectors, or is it?
No.
Oh,
like, would you? Yeah, well, the size.
All the companies are important to our economy. Large
Size
and small,
based on what?
But the size of the revenue or their assets and liabilities. Yep.
Okay. Would you classify audit and multidisciplinary firms as important to the Australian economy?
I think I understand where you're coming from. I think there are, yes, I think they are very important to the economy, and the question of their transparency or their indeed preparation of reports, audited financial reports, is something that I think has been the subject of interest and debate.
Okay. We heard from the ATO Deputy Commissioner, Mr. Jeremy Hirshorn, who classified the Big Four as systemically important firms. Do you concur with that assessment?
I don't know what he meant by systemically important. I think the phrasing used before about significance or importance, yes, we agree that the role that they play in our economy is very important. I think the point that they've raised or has been part of the debate is partnerships versus companies and the responsibilities that are described in here and that the Corporations Act apply to companies. I think that's the issue that you're alluding to.
Well, in part, yes. So systemically important in dealing with transparency, yet we don't have any transparency around those systemically important entities. We'll have more to say about that, I expect, from the committee. Now, on page 17, which you referred to earlier, ASIC talks to the importance of governance and communication within the audit firms. Could you provide more information about what brought forth these concerns and how ASIC sees the level of governance in the sector more generally?
Yeah, so just to remind others of where we're in the report, what this is a description of the voluntary review we did of the AQSM findings. Sorry, forgive me, maybe I'm not in that part. Sorry, you're right. So this is a more detailed readout of the various findings across the reviews, the audit file review, forgive me. And what we've done in this part of the report is set out what those findings are by category. And I think where you've taken us to is the other category. So it's preceded by some of the kind of ones where we had a higher hit rate with more particular findings, and we've included in table 10 some of the other findings, and then describe it after that some of the, the so what are our expectations. And yes, you're right that one of the ones that we've called out on this in this paragraph is the importance of the relationship in terms of communication between auditors and audit committees and company management.
Okay, and that refers to the companies that they're auditing or the companies from which they come, the audit companies themselves, or the audit entities?
It's the company being audited.
Okay, so you're not referring to the governance of the audit providers
in
that. Okay.
Not there, but like I said, I think the report also has the section on ASQM1, which had a look at some of the more firm-related governance questions.
Okay, so governance of the entities that are being observed is intimately tied with the sort of level of financial reports that an auditor will find when they come in to check things out. And if I read this correctly, there is some concern, and there's certainly observation ongoing by ASIC around the communication by the auditors about the governance models that they find when they do these audits. Is that correct? Is that the correct interpretation?
I think, though, no, I think that particular observation is around with whom auditors are communicating within the companies, and saying that it's really important that they speak to the senior decision makers in those companies because of the importance that their findings are for the financial reporting of that entity. Okay,
and you go on in the second paragraph to impress on the entities where an entity accounting policies deviate from the requirements of accounting standards. You push that auditors should continue to communicate these matters to management and those charged with governance. Mm-hmm. Okay. When a company determinedly sets itself up, or an entity that has to report sets itself up in a way that is seeking to get around accounting standards?
Yeah, so deviation from an accounting standard, I hear from your question, your concern particularly about deliberate and
people observe that, right?
By the auditor, whether it's a matter of judgment or inadvertent, all three categories may apply, but you're right that it includes deliberate and there's that action. So I think it's worth noting at that point that in addition to raising that with the governance, the senior people in the company, we've also included in the report the important topic of auditor reporting to ASIC. So that starts on page 21 and notes the auditor transparency report, but also requirements under section 311 of the Corps Act to make notification to ASIC of issues that auditors see. in conducting their audit. This is something
how
that
many
we-
notifications did you receive in 2023-24?
So that information is included on page 22 that describes all of the different ones. So if you look at the bottom of the first column on page 22, it notes that we received 850 notifications and reports, and half of those for being contraventions or suspension for failure to lodge.
Okay, and how does that compare with previous years?
I'm going to have to take that on notice.
If you can, give us a sort of a sense of that.
Oh,
Now-
forgive me, sorry. The next table has at least 1 year's comparison.
Yeah.
Yep, forgive me.
To
Yep.
24 and then 23.
Yep.
So you've got the dark blue and the
Yep.
light blue. So does that indicate an increase overall there of reporting? Am I reading that correctly?
That's how I would read it as well.
Okay. Why do you think that would be the case?
That auditors have identified and reported additional
Yeah.
areas. I'm looking at Greg to know whether he's got any underlying, like you're wondering about whether we've seen particular trends or drivers, not that we have immediate to hand, I'm sorry.
Well, only the only thing I would say, and there's no cause, we can't demonstrate the cause,
Yeah.
is that the attention that we've been giving to the relationship between auditing and financial reporting, and getting auditors, informing internal audit committees where we found problems and things. So I think there's been a bigger spotlight on this area. Whether this has prompted it, but it looks like a pretty significant jump there.
Yeah. So have you had any sanctions apply to auditors for failure to report? Because I know we've had conversations when we're looking into insolvency about, the automated AI. Sorry, Mr. Kirkland, we're going to run out of time to talk about AI, I think. The automated responses that were so prompt and the unnecessary reporting that was part of the findings of that inquiry. But at the same time, here we are with, auditor professional
I don't think we've got
behaviour.
that information at hand. In my mind, I'm thinking there has been, but we'd have to take that on notice.
I think the other thing to just put on the record is because in our letters to the 3,000 odd registered auditors and the CEOs of the audit firms that just went out this week, we did actively encourage auditors to both self-review with respect to their conflicts of independence requirements, but also reminded them of these obligations with respect to reporting to us anything that they see in the course of doing their audits. So my expectation is that these numbers will grow significantly.
Okay. Because you would be aware of some concerns about the practice of doing that have been live in the public place in the last little while. It could be bad for business if you actually do your job and report where you see dodgy things happening. Have you had any interactions with, CANS, IPA, CPA around professional obligations to report?
I think it's a topic that is, we have regular engagement with the industry associations and suspect that's a topic covered. Whether there's any particular observations, we might, again, check with colleagues who are having those day-to-day or regular conversations.
Can I encourage you to actually think about them as co-regulators, because that's essentially how they're constructed at the moment, as quasi-regulators. That's how they're described. And they are the ones who are doing a lot more interaction with people in the sector who they're supposedly licensing and monitoring and disciplining separately from your CAD-B model.
Thank you. We'll take that one on notice.
It would be good to find out a little bit about how many have reported internally to them in addition to you. If there's a change in practice, given the letters that you went out, can you send the letters to the committee to have a look at?
Oh, thank you. They were included. I think, sorry, yes, I can. They were
They might have
attached
been
to
sent and I
the...
haven't seen them.
I'll make sure that they're with you.
Thank you very much. I'm mindful of time, and this might be my last question. Following a limited review, ASIC's found concerns regarding the treatment of conflict of interest, which we discussed a little earlier. How concerning is the differential treatment of conflict of interest requirements between different auditors?
Can I ask which paragraph you're in, please, or which page?
Page 19 and page 23.
Okay, thank you. So can you remind me what how
So,
concerned are we?
How concerning is the differential treatment of conflict of interest requirements between differing auditors?
It is of concern, which is why we have designed our surveillance to write to all of the auditors.
Okay, so how did you observe this differentiation, this differential treatment? How did it manifest itself, and how did you observe it? What are the risks with it?
And is this grounded in paragraph 23? Page 23?
No, that's just a general question. Like, if you've observed this,
I described the basis on which. Sorry, I thought you were reading from the report.
no, that was.
Oh, forgive me. I've confused myself.
No, sorry,
So
we're trying to do a
we
lot
think
in
it's
short
an
time.
important issue.
Yep.
And we think it's important enough and we've got new surveillance strategies, and we've got a surveillance team that can bring data sources together.
Okay.
In those circumstances, we thought it was important, and we were able to have a look at the data matching across all registered auditors,
Right.
including with respect to independence and conflicts.
And does
so
this go to
that's-
anything that Mr. Kirkland might have been able to tell us about the use of AI? Is there any intersection between those things?
It's not AI. It's not an AI tool that
Right.
we're using. It's data matching
Okay.
between different ASIC and external data sources.
So it's a different model of observation, and that's how you've been able to figure out that there's a differential. And you describe it. Tell me if I'm reading this correctly. The differentials are things like the report length ranging from 20 to over 80 pages
This is on the ASQM1, I understand.
on page 21.
So that was the variability in terms of how they were adopting and reporting against that. So that was the first.
So no
year.
standardisation, really quite a degree of variability there.
In respect to that review of those
Yep.
particular reports, yes, there was variability, and there's some of the outcomes that we saw there described on page 19.
Okay, and you talk about the data set not set out clearly, often containing images. And this is one of the concerns that has been discussed by the committee and even in recent days. Transparency reports, the quality of transparency reports, reading almost as marketing or sales information rather than detailed data. Is that in fact a problem?
So the report separately to the ASQM1 oversight, our report on page 21 describes the reports that we have seen. So those are the auditor transparency reports that you refer to, and the sample review that we saw and undertook. So our conclusions here were that there were some compliance with minimum requirements, but that was sometimes not clear disclosure and not clear readability or comparability in the transparency report. So I think the observations that you drew my attention to with respect to the ASQM1 reports were not dissimilar to those that apply to the transparency reports.
Okay.
But I don't think we're disagreeing that there was a lot of marketing found in those reports. I think
Yeah,
I think that was one of our,
it
that's
seems
one,
like
well,
they
I think I know that's one of our findings.
powerfully diminished in terms of the integrity of the information in there and the depth and quality of the information. And these are potentially very useful requirements that should be widely accessible to any user of the information for whatever purpose. At the moment, they get lots of pretty pictures, a few diagrams, and not enough information.
I think we've made some very strong points on that section about our concerns about that.
And was that embedded in your letter to the audit companies as well, that the transparency reports are not made up to standard?
The letters that were circulated to the auditors themselves did not, because the transparency reports aren't prepared by those. I don't believe we referred to the transparency reports in the letters to the CEO, because the primary purpose of those communications was to describe the surveillance rather than to more generally speak to the importance of all the various different aspects of our work. So I believe not.
All right. Last question, if I can. Auditor rotation breaches on page 23. Notifications from auditors about suspected contraventions. what did you find here?
With respect to auditor rotation breaches, so
Yep.
you're on the first paragraph. When you say what did we find?
Well, it says that there have to be appropriate arrangements to monitor how long they've played a significant role in audit.
Yes.
What did you find?
Well, one of the findings was one of those 4 enforcement outcomes that I referred to earlier. It went to an action that we took in particular relation to auditor rotation requirements. More generally, we found concerns that warranted us focusing on this as one of those 3 areas in our surveillance. So it's an area that we want to unpack more about exactly what, how badly or how much of a problem this rotation problem is. So that's part of the data gathering that we'll be doing.
So at the moment, we're not clear on whether people are rotating in accordance with the standard principles, which I understand is can stay within a firm, but needs to have a new partner coming.
So there is the notification requirement that this provision, the Section 311 notification about that, includes that requirement to comply, to let us know if they haven't complied. But what our surveillance will do will help cross-check whether people have indeed, if they haven't done the right thing by way of rotation, whether they have notified us as they're required to do. So,
and that is for how many entities? The 29,000?
So this goes to an obligation on auditors, and it's all registered auditors, so the 3,000 odd registered auditors. With respect to the 29,000, you can only, to sign the audit of a firm, you need to be registered. So I think indirectly, if your question is coverage, then yes, our effort is to be widespread in our coverage by focusing on all of those who are registered. And
what is the data that you currently hold about the actions of those 3,000 registered company auditors?
So do you mean the registration process for them to come on board? They don't at an individual level have a, for example, annual reporting obligation. Instead, the provisions like this one go to if there is, for example, a non-compliance with a particular provision, then they need to report to us in those circumstances. But there isn't like an annual report or review response from auditors.
Okay. Do you see that as a data poverty point?
I think in looking at the different areas in which this framework has all come together and the various layers we've been talking about, whether additional information from particular individuals or firms would be more valuable is, I think, something that would be worth considering further.
Sorry, I did say that was my last question, but can I go to figure 13 because I don't quite understand exactly what that says. Audit surveillance by firm size. Page 28. During the surveillance period, we conducted 15 audit surveillances selected from the outcomes of our financial reporting reviews and surveillances. None of the audit surveillances were performed.
That's 9.
None of the audit surveillances were performed on audit files from the largest 6 firms.
No, that word is 9, not none.
9.
Yeah,
okay.
yeah.
9 of the
9.
audit forms.
No, we
Okay.
refused. No, 9. Yeah.
Okay, so 9, 4 and 2,
Yeah.
so proportionally apply to the sectors. Excellent, okay, thank you very much.
That's okay.
Great. I think that we won't open a new topic at this point of the day. Can I first of all thank my colleagues for being here to ask questions throughout the day. Thank you to ASIC and all the commissioners for the work that you do in the national interest, and thank you to our broadcasting, to Hansard, to the Secretariat and to our staff who support my Senate colleagues and others in this committee in doing the work that we do. That concludes today's hearing and the committee stands adjourned.